No time like the present time. No time like the present time. Okay. Hello, hello. Should do Monday afternoon. Should specify. Got that train coming in. Hey, how's it going? It's kind of an ugly day. It's kind of ugly. It's kind of not. It's sort of in between. So, yeah, we could kind of run through a lot of things here and pretty quickly get an idea of what maybe is going on, but it's earnings week, so a lot of the reactions and actions this week are going to be based on, more than likely, going to be based on some bigger earnings coming up this week. I think Tesla's this week, and a lot. I mean, there's like 700 something different kinds of earnings, so I mean, it's a lot. So yeah. Decided not to stream this morning on account that my family was all home and I didn't really feel like the price action was gonna be much more exciting till maybe this afternoon. So when they saw the upthrust, you can call it whatever you want to call it, it's definitely an upthrust with a backup. So we may not say it's officially like distributive yet, but that's what it is. I mean, you basically opened up, ran high, pushed resistance here to 442, and then it shut down. So it didn't even push resistance. So there's a question in my head about maybe price target wise, like what was trying to be accomplished here in the push to 442 area. It just didn't quite get there. And this says a high of 442. But I'm not so sure that it actually met it. This is a weird thing in the market. Every time I come on to TradingView, I always kind of ask this question in my head, like, does it matter? In my brain, I'm thinking, does it matter? I don't know the answer, you know? Does it matter if the wick doesn't meet the other wick? I think it does, because I think that could be like a percentage or like a portion of a penny. But it's really difficult to tell sometimes. So on this chart, the 442 that was higher was not met. And that's concerning because when you push out, you don't want your first action to not be to even push resistance. So like the last high that was made here was 442. And then it dipped and it made another high of 441, which definitely would have been passed. And you might say, well, that doesn't really matter that much, right? Like, well, it does, because you got to remember, like, this is where supply dumped all their shares, you know, and what we see is that when we come back to this range, this region right here where that first dump happened, this ends up being like a major wall for buyers. So when it came back up here, I mean, you can see visually on the chart, if it helps, that region right there being like in contention. We have this bizarre kind of gap down from that level on Friday. It was a midday gap down. It didn't happen in the morning. And just to kind of capture that level, and you can see the volume in that push on that breakout to get back into this range. And then it's a range between like 426 and 441. So when you retravel that range, what we're really seeing potentially, even though you may not like it, what you may be experiencing is like that initial short position opening. I mean, there's a lot of questions about distribution in terms of what's actually selling and what's actually just, I mean, it's all selling, right? It doesn't matter, but opening selling positions. I have to say, though, that my theory is that most of the time, this kind of stuff is not actually, I know like people are selling, but I think most of this is probably opening a short position, this kind of a move. This breakdown is very like intentional, and they're specifically like driving the price back up to this level in order to get like a good price to kind of reopen new short positions. So like anytime I think about this kind of stuff, I know there's selling going on, but it's not like, I don't think it's necessarily majority of it's like, oh, I've been holding shares and now I'm going to sell. I think that's like your stop losses and junk triggering. People that were looking for a rebound maybe and they didn't get it because they're being trapped, right? So it's like partially it's like a bull trap because there's like a hook here. They think it's going to recover and then it doesn't. So they sell off when it breaks back below the floor and you get this like influx of selling. We all know that's the way the market works. No one's sitting here trying to reinvent the wheel. The reason I'm mentioning it though is because part of me wonders if you go and read about, like go read Wyckoff theories, and if you go read about upthrusts and you go read about distribution cycles, one of the things that's very confusing is the buying, because there's a lot of buying that happens in a distribution, but it's really in an LSPY, for example, it's really about like closing out short positions and then re-entering them. And so a lot of the buying and selling that you're seeing is almost, I want to say it's all shorts, but it's like they're using any kind of bear or any kind of bull that might be convinced that it's going to turn around. They're using them. This is like in the case of like a bear flag, but they're predominantly like the price action is driven by shorts only. And it's the same with a bull flag. It's predominantly driven by longs only. They're selling and then re-entering positions and stuff like that. So like when I think about stuff like this, I wonder if an operator is going down to accumulate low, and we already know that they built out a platform here. They did, they built a platform here from 440 to 435. That was one of the areas we had marked off a long time ago. And then when you enter that low region, you're just opening a huge amount of short positions and dumping the stock. And then you're getting a bunch of triggered stop losses and junk and people selling off on the way back down. Then when you get back up here, there's the danger of that volume really being tied to just covering. And it may seem a little confusing because you're like, why even bother? Why open a short position? Why not cover down here where you're making a profit? Well, I think there's some of that. To some degree they are. But like the mechanical nature of it, I'm sure there's like a yin yang, right? Like, so I'm sure there's some that's happening down here. And I think we see that when we see those reactions, and we've been measuring them out like, oh, when you react from a bottom, a lot of times you get that initial drop. So like that drop in target can become, if there's a shallow S curve, that drop in target can become a pretty decent target for the reaction. And it usually matches pretty well, like with the reactive move. If it manages to kind of build out a bottom and return back up. So I think there's a lot to that though. Like intrinsically, like why would that work? What would be the mechanics behind that? We just kind of take it for what it is. Like I just sort of say these things like, oh, it's going to react and do this. I think part of the reason why that works is because of perhaps what the game plan is. If I want to drop the stock down here, but I don't necessarily want to stay here forever, I want to try to build out a range here. One of the ways I can do that is by controlling, right, the price action through opening and closing of shorts. And so I always think about how like that initial place where you see that big heavy drop, we call it the caddy or the second caddy. It's a really important level. And you can usually see, so I'm coming full circle here, okay? You can usually see the intent of the operator when it comes back up, because when this is bullish, and we explored a lot of examples of this last week, I believe. I remember talking about this, and I thought we saw a few different examples that were pretty good. When this is bullish, you should get a push back above, because it's sort of indicating that there's really like a desire to kind of push resistance and keep going. I'm not really seeing that here, so that's bothersome to me. That doesn't mean it couldn't happen. I'm just not seeing it. The other thing that I'm thinking is that we got this big buy-in and then they like let go. And that's another sign of like potentially, it's like really confusing, right? Because it's like one of two things and that it's like complete opposites. One is like an ascending accumulation, which you really can't confirm unless the creek holds, and then it does it again. And we only see that, I call it an ascending accumulation because it looks like an upward channel that could go kind of parabolic. There is an ascending accumulation model in Wyckoff, and it's similar. The way we see it in our particular chart, hang on, I shouldn't have got rid of that. The way we see it in our particular chart tends to look like a series of like up thrusts followed by letting go, and then some people call these like J shapes, things like that. It's basically just like a buy-in period. The problem with this is easy to confuse with, very easy to confuse with a distribution, because we see this happen also in a distribution in what's we call an LSPY or a bear flag. So what's the difference, Booksy? It's kind of like splitting hairs, but typically if we spend a huge amount of time like really extreme lows on the channel, and then you're seeing like a massive buy-in, but there's like very little in terms of volume on the other side of that. So it's just like high volume, high volume, high volume. Maybe there's a high volume in, high volume out, high volume in, high volume out. That kind of stuff reads more like distribution to me, especially if you're spending a lot of time down low. And especially if it's very, like, let's just say it's not parabolic. It's much more like linear. That to me looks more like a bear flag, potentially. And that does happen. You know, it happened to us back in May. That was one of the things that bothered me about that area. You probably recall this if you were around at that time, me thinking that it could be an ascending accumulation, but it really looked more like a bear flag to me. That was this guy. And the reason for that is that when you look at the volume, it's kind of anemic. There's like no volume here in the follow through. So you see, like, this is just an example that I'm trying to give you that shows you like one example of like, yeah, this is distributive. Notice like it spends most of the time like trading these bottoms, and like that's a pretty big tell of like distribution is high volatility. The volume's all in like the peaks. So like the volume in the bottoms on these is like terrible. And it's really just ramping up into the tops and then dropping. And what that is that shorts covering. Like that's exactly what that is. It's profit taking from shorts. It's like exiting short positions. It's not actually like buying up as much as you would think it is. Now, that doesn't mean that no one is buying, you know, except for the shorts who are covering. That's not exactly right either. That would be silly to say. Of course, a lot of people were buying in here, but the predominant action was definitely shorts covering. And you can just see it. The volume looks just awful. And it's highly volatile, and we're spending a lot of time in those lows and just pumping, really to get back up to that level that ultimately we dropped from, which was around 540, and that was kind of where we dropped in. So it's just a matter of like kind of backing up mechanically. So how is that different from like a rising accumulation? I mean, it's pretty different. A rising accumulation tends to be a lot more, I don't know what the word is, low volatility maybe is just a better way to put it. So like where this will be like ridiculously incredibly like out there high pumps with like high volume pumps, and then there's nothing else going on. With an ascending accumulation, it tends to be a pretty decent pattern of pump and drop, but every time you come back down, there's a nice little gentle buy-in. You don't come back through creeks. Tends to be pretty straightforward, in terms of the movement, meaning it looks pretty much the same every time. And then at the end, you might get like a larger, higher distribution that comes back down one more time. This has happened to us every single time before we've run up. So this isn't like a one-off, why are you always looking for this, Booksy? Because it's pretty much every single time. The only time this didn't really happen, arguably, would be back in May recently. But every other major run-up we've had this motion somewhere in there. And it's straightforward. Basically, your operators are buying and then letting it go. They're just letting like the market sell. But what you don't get is you don't get this like extreme trading on like the lows. You don't get extreme trading on like these big pumps. You don't get these massive up thrusts, every other day. It's like gentle moves, just walking it up. A very controlled manner until the very end. And then there's usually like a bigger backup that needs to happen. And that's because this tends to go a little bit parabolic at the end. Like it usually kind of ramps up. I didn't do a great job drawing that out, but it would be like this to some degree, right? And you're also approaching every time. You're always approaching some like major creek, and you're usually jumping like minor creeks along the way, like all the way down. So when I look at this, I'm not really sure what to make of this just yet, because in the grand scheme of things, we already talked about this. It's out. AMC's out of its channel. AMC's out of its channel. It doesn't need to break out again. But I had mentioned maybe a couple times that this seemed like a realistic possibility if we were going to sort of delay, let's say, a move through the week, that you may get that buy-in. What I'm seeing right now just to me looks like a pretty straightforward jump of a creek here, where you get the double wave 1, 2, and then you may back up to see if you can get back to that creek. So to keep it as simple as possible, if you don't care about this idea of ascending accumulation versus sellers, and we don't care, because right now it's like, well, I don't really know what to make of that. Maybe you think it's distribution, maybe you think it's accumulation. Doesn't really matter. You would look at the intersection here of these two major creeks. The one rising, we're calling it the ice, and the one falling right now is the last one that we checked, which is back here. It's pretty low. It's back down near 420. So the problem with that, of course, being that we spent a lot of time trying to get back over 424. And so it would be kind of a bummer if we had to come all the way back and check that. Some folks are going to say, well, we don't have to do that. I was funny because I went on the Discord after, I think it was Friday or Thursday, and maybe it was Friday. It had to have been Friday. And the first comment I saw on the Discord, and I don't check the Discord during the stream very much at all, I usually don't, was like, why would we have to fill that gap? We already have a gap down low. I don't know. That's not really what I care about. Like, the answer of why is a difficult one. It's speculative. And there's definitely some places where I've been like, why would we fill this gap? Why would we fill that gap? And I'm like, I don't think we'd need to. When we talk about the gap down at 3s, it's probably the easiest one on AMC to argue for a breakaway, because it's the highest volume breakout like ever on AMC. I mean, it's humongous. There's no comparison. So when you look at it, it's like, this might be the only one where somebody could look at this and say, yeah, I think there could be a breakaway there. I've said that before, and it doesn't work out. But if I talk about why would you come back down? Because it never really tested that area. We never really traded anything right here, like at all. So for us, it's not really hard to say, well, why would you come back down? Well, because it's there. It's not just because of the gap, because you didn't trade it. Also, this was a very short-winded area. We never traded low, but for some reason, the institutions that did come down here, you know, into the twos, and they spent a little bit of time there, and then they just kind of bought back out. And in terms of a range, we've seen that kind of stuff before where it builds up at the bottom and then it comes up and then comes back down later. And that's kind of been the ongoing narrative here, per se. When we talk about a little gap locally, I just don't want to, like, I don't overcomplicate it. If I see a small gap on like the daily that's a couple pennies, it should just be a flag at this point. Like, nobody should look at that kind of stuff and even question it. If you got a small gap, there's potentially a problem there. You know, we had a small gap back here at like 82 cents or something, 482 or something like that, I remember. And it was like, yeah, that's a problem. I mean, it's just, it's ever there. Unless you jump the creek, you're not, and it's probably going to come back. You know, it's that simple. You don't need to overthink it. So on the big picture, sure, like we can sit and debate whether a gap has to be filled or not, or what that would do to the chart, et cetera, et cetera. On the small scale, does this have to be filled? No. I mean, it's a couple pennies. It's a single penny, you know. Does it have to be filled? The answer would, of course, be no. But why do it? Why even have a gap there? You know, sometimes those are markers for institutions, and I don't know why they do that. They just do it. And Wyckoff talks about these markers all the time. It's like these drop-in zone markers where it's like, yeah, this is where we're going to come back. That's kind of what I'm talking about this morning, is like this drop-in is a pretty important marker. Anytime there's like and I think this is a gap right here as well, up here at 440. Anytime there's like a little gap when you're making like a huge move out of a range, that should be a signal to you that you might be coming back up there later. There's unresolved business there, right? I don't see it as complicated, and I think that's probably why, and how I would say a lot of swing traders, you know, would take advantage of this like 10% swing by looking at something like that and say, yeah, it's probably going to come back up. Does this always work in the market? No. It doesn't always work. You know, sometimes we were looking at that WTO chart, for example. Sometimes these markers, they don't get met again. But that's the market. You play on risk. You know, you play on probability. There's times where they're not going to fill. But if like 80% of the time that just marks off a place you're going to come back to, then you should be able to pretty easily determine. And we did, by the way, that once you break out of 424, you're probably going to come back up, you know, to 440. Like that was the given. And then we had the measurement for like a potential S-curve here up to 432. And that's what we got last week before the week ended. So all that's to say, right? Well, that's great, Booksy, but what is this? Is this distribution? Is it accumulation? I don't think it has to be written in stone just yet. Right now, the volume is pretty darn low, and the volatility is still pretty decent, so it's a bit of a mixed bag. If this volume were low and the volatility was even lower, like we weren't moving as far on these moves, I'd probably be a little bit more bullish and less hesitant. Do I think it looks like hyper distribution or something? No. Do I think it could be like a flagging action potentially? Maybe. You know, like I said, there's not really like a huge amount of volume in this bottom, and that is actually a good thing because in some ways, because if this were a LSPY, you'd probably have pretty massive up thrusts right here that unfortunately, you know, gets sold down. I wish it weren't the case. I know I've said this a lot recently, but sometimes your operator does this on purpose. I don't know if they're doing it on purpose or not necessarily. I'm just guessing. But like, it feels like they do it on purpose, where they don't give you the answer right away. So this week, when we're starting off the week with this push up, all I'm going to say right now is that it doesn't have enough height to it to push resistance. I don't think it pushed resistance. I do think it pushed over like the last possible top, but I think if you look at this as a whole, it doesn't look like it came up high enough. So if this had pushed up and broke resistance here, I would have been a little bit more bullish for it to come back down, regain traction, and then do it again. because it came a little bit low, it just looks like it was trying to push and just failed. And when I went to IWM this morning, I was like, oh, okay, well, this is probably why. So you're getting like a massive sell down today after forming out like a cat ears on Thursday, Friday last week. This is completely, totally like fine on IWM. So if I'm thinking like this is fine on IWM, I probably shouldn't be worried too much on AMC either. And when we talked about IWM, we did a big charting kind of session for IWM, which is the Russell 2000. And it seemed to me that it was very likely it could come back to 219. There were three spots. One was here, 222, which is where we are. The other was 219 down here. And then the final one is 216, which is kind of really low, but absolutely it's possible. To be very, very, very blunt and frank with you, and I think that you should be in the market, you have to take all of these kind of spring-like actions into consideration as possibilities for future supports later. I'm not saying, like, again, that I necessarily think this has to happen or it will happen for sure. But sure, if it failed to find support at 219, 216, I think you're likely going to come back to that 213 gap, which, by the way, it's a gap, right? It was left open. Is this like a bad sign for IWM if it comes all the way back down through there? It's not great because on the whole, like, we're seeing this as a large M cross, and you could see like the argument would have to be, well, it's going to come back down here and it'd have to be like a larger M-shaped cross or whatever. I don't think that that's a big deal though, because in this particular case, the verticality of these moves makes it so that the creeks are also highly vertical. Like highly vertical. So in this case, again, maybe not exclusively, but it is very important to note that in this case, there's a possibility you come down really low because the creeks are super low. Well, what about that creek right there? You said that one was higher. It is and it isn't. Like right now it is, because right now it's found some moderate support at 220. When it pushed up above here on that breakout, it found buy-in right here in this pocket around 220. So right now there's a moderate amount of support pushing up right here at 220, which tells me that the creek could find a rest there, and that would make more sense coming back down. And we went through all this last time. I'm not going to go through it again. But this would be like a simple place to find a landing. However, it's also worth noting that, like, yes, that's true, but if you look at where the resistances are, there's really no back tracing here. Like, there's very little. There's a little one back to 219.37, which again coincides with that same level. But then beyond that, there's nothing. Like, there's just one solid green bar all the way up. So you have to then look at, okay, well, what else is there here, that I could look at? And it's just really steep right there. I mean, yeah, there's possibly a support right here. Visually, it's kind of obvious that it could be there, but it's also frustrating because there wasn't really any major attempt again to come back and check that. When you look for natural places for the market to back up, it's going to go back down to places where it's had support before. There's not really much support to speak of right here, Like, this was a resistance that was being sold off. So it has to create that support. There was like a mild support built out here September 30th, maybe September 23rd. There's a little bit of buying off that level, and that's it. Like, there's nothing else there. Every other time it's come through here, even back here, it's like a little bit maybe in July, but this has all been like distribution tops. So the problem is that you have to now make this into a support, and it's just not there yet. So there's no reason that I would ever suspect that it couldn't come down there, right? And then beyond that, you're kind of like, oh, well, what's left? Well, not much, Certainly if this wanted to come really, really low, there's room for that. And I think it's possible. Do I think it's fair? Do I think it's like sensible that the market's having such high volatility? These are massive swings for the small caps. I mean, we're talking about really big moves, lately. 13%, 13%. I mean, a lot of these moves almost been erasing themselves right after they make it, you know. Do I think it's cool that they're having big swings? No, not necessarily, but they're swings. I mean, people who are trading them and making money on them are trading swings. People who are looking long term are just looking for good entries. So they're not necessarily thinking this is bearish, and I don't think it's bearish yet. They're just looking at it saying, well, if it comes down to 213, it comes down to 213, that's a good place for me to buy in, you know. So the danger of all of this is like you buy in on these big moves and then they're selling off and you get screwed because you're trapped early. Well, that's the market, you know, in a nutshell. That's the way that they get liquidity, you know, to make their sales when they want to sell. So I'm just saying, like, on the big picture, is it possible this comes down to 213? Yeah. Did we set it up to where it could potentially not do that? Yeah. And I think there's other evidences there. I think probably plenty of people are looking at other trends like over here, maybe even this guy. You know, there's places this could find rest. It looks like a rising wedge when you do it like that. You know, doesn't exactly look super bullish, does it? When you look at it like this, you're like, oh no, it's going to come up and then dump all the way back down. And it's just, all this is just some giant distribution scheme. And yeah, maybe, you know, until it breaks above 225, that region at 225, 226, and holds it as support, you can't confirm it. Once it's confirmed, yeah, it should just go. I think that's where you're going to get the bigger pushes. But these markers that I draw that are kind of hypothetical markers, they're important because, like, this is, for example, a push that comes above the top. Like, it needs to come above this, like, 230 area, and then it comes back down and finds support at 226. Did that happen? No. Did it come above 225 and hold? Yeah. That's good because it hasn't yet done that. We hadn't had that trading in this zone. So it's good. But ultimately, it sold off, went back through, didn't hold the support. So that's not as good. Well, how can you flip-flop like that? It's easy. I don't enter positions unless I'm sure the move is about to happen. Like, if I had entered a position, it would have been back here during this bear flag to get to the top here. And that would have been it. Then you wait and see if it holds. If it doesn't hold, then you're done. And that's how they get the selling they need to drop it. So when I look at small caps, and I'm kind of just, again, spitballing here, but I'm saying that, like, when I look at them, I really feel like on the whole, this could come pretty far down. And yeah, I think potentially you could get that gap fill. And that does change the chart a bit, but it doesn't necessarily break anything either. Like, just because it comes low does not mean that it couldn't have like an accumulation down here and then push back out. And then you're just right back to where you were, albeit it took a different path to get there. And some folks will know, of course, that this is like elections down here. So bringing it low into elections may not be a bad thing. If you're not ready to break out, you're not sure you're going to break out above 250, you're not sure how the market's going to react, bringing it low to 213 is probably safer. You know, it gives you a sense of directional security because you can kind of take it either way. On the one hand, if you want to continue to fail here on this downward motion, you've got the potential to build out like a bear flag underneath here, which is like a hook, and then drop it down real low to like 200s again. That's probably where it would go, like way down here, you know, all the way back down to 200, maybe even lower than that if it just continued. Right? That's a possibility, you know, on a massive sell-off. On the other hand, if you have that false breakdown and then it reverses, that's a really strong technical signal. And if that were to happen, you could have like a massive quick reversal. It'd probably be faster than I drew it. I drew it really slow. That, yeah, like kind of melts up to 230s and then quickly catches its support and takes off again going into December. This is an ideal place to do that where you're filling the gap because it's bullish on the one hand and it's bearish on the other hand. So that's unfortunate for maybe if we did do that move all the way down. It's unfortunate maybe for something like AMC, which, you know, you're like, well, then what the heck happens to AMC? I don't know for a fact that AMC is going to go significantly lower or anything. I don't think it necessarily has to. You look at the M cross, to me it's like, yeah, it's fine. I mean, it jumped up, pushed, did the little micro M shape right here as it jumped like the main creek on the outside, and then it advanced. You know, my only concern is if it did drop low, and it's a lot like what happened back here perhaps a couple times. My main concern is that you're getting a reactive move that isn't complete. And so if it doesn't hold above the support that it's built out or that it's jumped over at 424 and you guys are like, but there's a gap. I know, right? That's the drama of it, right? Because the gap is below the support. That's why it's dramatic, because it would be better to be higher because we could fill the gap without coming back below. Then there's not really any reason to speculate it couldn't be any different than something like this, where you remember back at 520 when we upthrusted, we didn't quite make it, came back through. So at this point, what we really want to see is we want to see continuation. And I said that, but it's a little different because this actually had a sign of weakness first back at 520 back here. So I don't want to make it sound like it's a one-to-one. It's not. This had a minor sign of weakness right in the beginning when it broke through that ice, and then it went up high. This didn't do that, so there's a positive there. It looks a lot healthier. The only thing I'm concerned about, and I've mentioned this before, was like at the very, very beginning of this, when it first came down to the fours, it kind of dipped to 403 on that spring. And so just like IWM, you kind of can take that and draw out that bottom. I did it over here. You can draw out that bottom and it could give you a sense of like direction should there be a breakdown. It's not definitely will be. It's like, should there be a breakdown, that could give you a sense of directional support. It's not super low. So the good news is it's not like the bottom of the barrel low, right? Bad news is that perhaps when IWM we're talking about, oh, maybe we come all the way down here by November. Well, obviously, you know, that could mean a lot of things for AMC, which in my chart still says estimated earnings on November 4th. I don't know if that's going to change. But certainly that looks more like 380s, you know, if you were just going to follow that down. And that's significant. You know, that's a very significant new low. So it's like, well, then what happened to the rest of this, Booksy? Nothing. That's the weird thing. I don't think it means anything. I don't think it means that this didn't break out here. I think it means if you're going to change it, if anything, you could make this like wider, and that's frustrating. And this is the way that operators have typically done it on AMC to waste our time. Is like you now have to drive this out further. So there's a lot longer of a time you can see between. You guys are like, this sucks, man. Again, I'm not saying this is going to happen. Hopefully we just hold the support and go, right? We've talked about the RSI. We've talked about other things. There's a lot of really cool stuff happening right now. And if we jump these moves, it's not going to be bearish, okay? I'm just going to present you with the bearish case first so that we have it in the back of our mind. Yeah, if this went low, I think you're going to 50-50, potentially around $4, come down to like the 380s. And at that point, who knows? You got a lot of space between there and elections, which are right over here. There's plenty of room to do what you want to do. Maybe even make the lower low. And some of you will say, well, that's garbage because obviously if it jumped, it should be just going. Yeah, it is garbage. It shows a certain amount of weakness on the part of the AMC liquidity. But I have to be honest with you, like this has already been happening. Like we've already had the same thing happen. We jumped over here on the 13th, and then we spent like 2-3 weeks more coming down on the side of that. On the side of that major creek body. So it's like, has AMC been acting strong lately? No, not really. So would this be out of character to like hop this creek and then ride it, this outer creek here, and then ride it back down low? No, unfortunately, that's not exactly out of character. That's actually in line with what we've seen lately on AMC because it's been making these advances and then just doesn't go anywhere. And this has happened frequently. Frequently. on AMC. We started doing it back here in August, and if you recall, that's the first one, and then we did another larger one here. So it's absolutely not out of the question you could have another slide down. So how do you avoid that, Booksy? Well, we have markers, like we talked about on IWM, we talked about on AMC earlier. The markers on these drop-offs are really important, and one of them is at 441. So the first major sign of strength here for me would be a push back into the 440s, like the higher 440s, not just bottom of the barrel 440s. If we could get a push above the 440s, to me that's like a confirmation zone. I think there's a stronger potential for a run. So I think I would call this like a stronger confirmation if it came back above there. This is not different from last week. It's the same thing. We knew it had to get back above here and find support, and it is a stronger confirmation. All right. It would tell me that we're probably going to try to advance and get the outermost creek, just as the crow flies right above us, like up at 465. Probably by the time we get there, it'd be at 460. This red level, it's triangulated already. That's where I have the markings because I thought, well, it's probably going to be there if we get there. Within the week or so. Could break out before, but there it is, right, that level. And that's kind of the place that you really want to be ultimately. That's a stronger floor than any of these other ones we've made. So getting a rebound here, the M cross finishing and then rebounding, and it could come back down and even get that gap. As long as it comes back above, I don't really care, right? That's the strongest potential move that we have, and I think the confirmation for that is just a bit higher. It's 16 cents higher. Some people are probably like lamenting. They're like, well, I missed 40 cents moving from the bottom here on this move up. No, you didn't. You just didn't trade it if you didn't trade it. Because we talked about it last week. The implied move was at least to 432 back to this level, and it happened. So, like, if you didn't take that move, that's fine. Like, then you didn't take the move. Don't worry about it. Now what you're waiting for is some kind of a support confirmed. Ideally, it happens today or tomorrow because I think we could get down and fill that gap without breaking our ice level. So I honestly think it'd be better for us if we're going to go down and fill the gap to go ahead and do it early. If we're not, then who cares, right? Just build out a support and go again. Doesn't matter as long as we have a support built in this little region. Makes no difference if it's filling that gap or not, as long as the support is strong, But if we're not going to build that support, I'd rather go ahead and go back down and get that level. Could it break the ice and then come back out? Yeah, I mean, it can happen, but and this is just one of those things where you'd have to wait and see. If it went low here, it would have to be like in order to dip beneath, for example, like dip beneath 420 in a spring-like moment. So you could have it, technically it could come up and cross with like cat ears. This is what happens on those examples that we look at and then break out later. And some of you guys are looking at this like, well, this looks like there's a million possibilities. Not really. Most of it's fairly anchored right around here where we are anyways. And we knew that if we pushed up to 430s, like that wasn't high enough. So last week on AMC, we talked about how that S-curve doesn't really get you high enough, so it'd have to be some kind of extension, and it did. But then we really wanted it to push above this resistance, and I just don't think it did. So we'll see. Maybe there's another push in this. Maybe it will go higher and then come back down. I don't know. It's not here yet. Right now, I'm just waiting to see what's going to happen next. And no, I'm not looking at anything else. Some people are probably like, look at this, look at this, look at this. I'm like, we can check EMAs if you want to check EMAs. We already know they were going to be in that pocket. And so we had looked at that last week. We went through all the EMAs. And on the 4 hour, they're really more or less up here at the 60 cent, 460. There's nothing really down here. On the daily, we were a lot closer to that 200 on the daily, and that is essentially what you may say we knocked against it today. I don't know. Whenever you approach an EMA, it's kind of like a zone, right? Sure. Like we approached it right here. Looks kind of weak right now. Looks like an inverted hammer almost. Almost. And then it didn't really breach it. It would have to breach 445. So again, once again, stronger confirmation is up here in the same pocket at 445. So it's giving us the same story. I haven't checked out the MACD in a while. So they crossed up. That's good. That's a bullish signal. It could be very strong if it continues. It's part and partial to an LSPY if it can't continue. So you can look backwards and see the multiple times this has had attempted breaks on the MACD indicator. I'm on the daily. It's not a small time frame. There was one back here in June. That was early on with the Roaring Kitty stuff. There was a second one in July. That's exactly where we thought it might break out again. And then there was another one right here on September 13th. Those are the big ones, y'all. Like, it's the same exact dates that we picked out with the methodology that I use. It's the same markings. Here, that was the double cat ear. This one, not so much on here, although it did cross down, which is interesting. So that's another one. And then the 13th, right here, it was the other area that it tried to jump. So, yeah, I hear you, Jason. I got to get through like the big guys here, and then we can go look at some other stuff, okay? I'm not ignoring you. I'll ask again in a minute, but we'll take a look. So, does this look promising? Yeah, it looks promising. I would suggest that it's probably the closest, at least on the MACD. I mean, it's arguable. It really does a lot of the same thing that our creek did up here, doesn't it? Isn't that interesting? How like that marker that I picked out, I think that's super fascinating. Like the price action didn't follow it, but then look at where the MACD is when it finally crossed up. I think it may be arguable that that might be a better representation of like the actual creek jump. And it looks like a cat ear, like a paw with ear 1, ear 2. It's really interesting. I think that's fascinating. Yeah, I don't know. You guys might not agree, but I think it's really interesting because this marker is a mirroring of that upward trend. It's just cool. So is it possible that this is really, really bullish and good? Yes. I also want to point out, at least on the MACD here, that the last time we took off in May, it was sitting at, I had marked this off, it was sitting at around that negative 0.1. And we're kind of turning up in a very similar region right now. So I don't think that's necessarily like causation, more of a correlation. But certainly, yeah, that could be a positive indication if it continued upward. So that's cool. Let's check out the RSI. Yeah, there's nothing particularly new to talk about here. I think I did this on 4 hours, so it looks a little wide. It turned up a bit again. When we took off back in May, the RSI on the daily was at like 40. We're sitting at 45 right now, 44. So certainly if it had a pullback and it met at 40, you know, maybe it would be like retesting that moving average like we did back here in May. Kind of delays things, but it would look good. You know, there is a jump here that's fairly clear from, again, the September 13th area down. That jump has happened, but the bigger jump I do not think has occurred yet. Much like the other one, maybe we could argue that there was it's already happened, kind of like on the MACD, we were arguing maybe that 13th was the jump. But if we look at like the outer or lower, I should say, creek body, we're kind of sitting right on it right now. We're not out yet. There's a channel. And on the daily, this almost looks like a slight widening. Just slightly. Yeah. Maybe. Or maybe it just broke that little channel and then came back up into it. I don't know. Yeah, that looks better to me. So, is it out? No, not quite. Is it almost out? Yeah. And same thing. You get what looks like a paw with an ear 1, ear 2. This is very important for me because when I look at stuff like this, I'm always thinking about like where are they because of the tops and the bottoms on them, right? And like it's not so much that it needs to be always like exactly like a cat ear necessarily. But it's interesting how in like the price action, we've talked about how this is the middle back here in August, and it doesn't really look like it because there's like a quadruple flush, like a 1, 2, 3, 4 that happens that's like massive, and it almost doesn't make sense, and it doesn't even reflect in the RSI like that big push up doesn't. There was a lot of news going on there, but if you look at the RSI and do the helicopter view of it, it's not complicated. It looks pretty straightforward. Like you can visually see the walk down. So this is the lower part of the M right here, and you can visually see the upper parts. And these are waves, and so this is defining the wave as it's moving, right? The price action, yeah, it's going down, so is RSI, and it certainly doesn't feel like great when that's happening, but this is a way to understand, like, all right, if this reacts strongly, you know, which it could, if this reacts strongly, like, where would maybe this RSI go? And it's pretty straightforward. Like, that's the waveform, right? So if you get that strong reaction on that push, you should get a wave back out to the top. Does it have to be symmetrical, Booksy? Does it have to do this kind of stuff on this side? Nah, not really. That's not really like a thing. It can sometimes be very symmetrical. What's most important is, again, like understanding where that trajectory is and then using that to help sort of inform price action going forward. And I think we've done that. Like we've used that same trajectory model to understand price action going forward. And certainly, again, there's always more than one interpretation of the same information. But it's easier to see the cat ears here maybe than it is in price action, which is nice. So you can kind of tell where that wave is. Another thing that kind of bothers me about the chart is that when I use the price action, this particular uptrend hasn't really been as reliable. There's really nothing to use it for because once we left it on July 23rd, we never touched it again. So it becomes this sort of anomaly of like, all right, there's a theory that you have that it's going to do this thing based on that original trajectory, but it's just an idea. Where's the actual like strongest, you know, trajectory? And we kind of talked about this a little while ago, but there's another trend on the range that was built out starting in April. That trend may be a bit stronger, you know, and maybe what we're interacting with right now to a larger degree. I think a lot of people have seen this and used this and said, you know, I think this is probably where it's coming back to. And I would agree with them. You know, I didn't make it perfect. I just kind of doodled it, but there is a trend here. The issue with that is it doesn't reflect anything about the cat ears either. So it's like the major wave may be a bit confusing because there's like 1, 2, 3 pivots that you could use. One is back here on May in basically the very end, 31st, that drop. The other would be the pivot right here, May 10th. But from that pivot, you can pick 2 outstanding other points of trajectory. So that creates like a funnel, right, for this walk down. That's pretty massive. And then if you look at RSI, it's like, well, that didn't really look like that on RSI. You kind of like drew it in the middle there. Yep. And this is where things get a little bit dicey with maybe with waveform stuff. It's like, do I use the very bottom or do I use where the supports are built? I think you have to just use both and accept that you don't have like the full answer all the time. Probably they're both being used. You know, if I use that, you can see we're kind of approaching it right now. I guess what I'm trying to say is I don't feel like there's a seriously right or seriously wrong answer. And I think all of them are equally valid as potential trajectory points. So using like the bottom of ear 1 and the top of ear 2, that's a valid wave because there's a bottom built here and then it broke down and then it created a top. Totally valid to use that as a waveform trajectory. Makes sense to me. So you could use the bottom here, you could use the bottom here. So which is it? I think it's all, like I said, I think it's all of them. I think that they all kind of match up in different ways. You can see very clearly, like this tends to point more towards, and this is what we found on the comparison to March. This tends to point more towards the top SOS, which is at 6. So it's, in some ways, this one's kind of redundant. It's like, well, we already know if it went up, it would have to hit 6. It's the same region. It's probably going to go there, like at some point, and that would be in contention, but it's also the top, so who cares? So it's a redundant point, meaning it's the same thing. So we probably don't even need to worry too much about that one on the big picture. The bottom one is really low, so that might be one that's more concerning. That's pretty low. And I use these again as two separate pivots, but they both go back to basically the same point. Anywho, point being that, like, yeah, there's a really low one here. That one only comes to like 489. But then I asked the question, is that like midway? Is that halfway up? Yeah, it's halfway up. So probably, again, these two are going to be used as like a halfway point and then a top point for like this initial move back through the range. And that's that for that wave. You would come back up to meet that end. And then the last ones are the big ones. And again, I think there's just a number of ways of interpreting it. Like, on the one hand, I think we talked about this before, this is a parallel to the other. So I think in some ways this probably represents, looking back at the April trend through May, not the lowest April one, but the higher one starting on the 18th, probably represents just a parallel structure here. We found that parallel structure in the 2020 build out as well. So again, this may not be the most important trend, but it's there, and maybe it's necessary to use that to some degree. Okay. What if that's the trend that it's used? It does a little spring beneath it, and then it takes off, and I don't know. Maybe that's the LSPY we get. We get the drop down. Maybe it goes to the gap, and then it rebounds, and that's that. Or excuse me, the LPS, and it doesn't ever make a low spring in the twos. I don't know. It's too early to tell. I don't want to throw that at the window and say like, oh, this is going to stick, but it could. The other one that makes more sense to me is, again, the trajectory upward in using those. And we did this a couple different ways. And the only one I don't have drawn here is this guy. This one's a bit odd. Maybe I should do this one. It's a bit unique. I'm going to change the color on it because it's a different one. And this has more to do with what we see as the second cat ear, not the middle. And I don't want to be that, I'm kind of all over the place right now. I feel like I might lose some folks if I get too nitty gritty. But when I've done this in the past, what I found is that the middle of the cat ear tends to be a better indication. So like the middle M cross, which would be back here in August, on August 8th. Maybe area right here, the middle M cross, the middle of that wave between the two ears tends to be more important. So there's an M cross that happens in the center, and then there's like the bigger one over here, which is obviously the other upper wave. So to make sense of that, let me just quickly doodle it. It's just really simple idea. You can see it on the RSI, but if you don't understand what I'm saying, I'll quickly doodle it. So you have like a major cat ear, and then you've got kind of like a minor cross in the middle, and then you've got a major cat ear right on the other side. This is really typical that this appears all over the market in a distribution cycle. And what I found is that the middle here, from like whatever, let's say from a low over here, for just a simple example, there's nothing else to this. That middle tends to be a better kind of marker than necessarily what happened over here. Does that make sense? So like this center mark here, I'd have to do this right. I have to make it look right. Otherwise it doesn't work. That tends to be a better trajectory possibility than this here. Even though like technically it broke down here on the bigger wave, if it's bullish, it tends to not be as important. Like it'll pass through that, but it won't stay there. So the center of the total is this guy. So if you look at it like that's a big wave, it's like that's the middle of the wave over here. That's what I'm saying. How do you know that? Well, GME and AMC both went to their giant cat ear middles on the big run-ups. So if you're wondering like where is that kind of illustrated, that's where it's best illustrated. And then there's other places that it's illustrated as well. So because the little middle cross that happens, and in our case, again, around August 8th, that's when we saw the iteration change. That was the center mark of that wave. That's roughly where you would see that trajectory. And so, yeah. So I think we have a better idea of ultimately where it could go there. However, it's cool to see that if you use the lower cat ear, if you use that second wave, which is maybe visually it's easier to see because of that big push up that happened right here in September going into like the 13th when the FOMC announcements and junk were going to happen. It's kind of interesting to see that now and look back at it because I see this as continuity, that there could be another potential stopping place around 8s and 9s, and this looks like it kind of approaches that. Now, the trajectory for it doesn't approach it right away, does it? It approaches it way over here in like December or something. If you just look at where the intersection is, the triangulation, right? But if it managed to jump that and hold it as a support, and that ends up being a pretty pivotal moment, this could be one of those moments where we see that wave cross come into play, even back as far as here, to be honest. It's kind of neat. So structurally, like, these are the levels that I'm looking at for potential supports going forward. Have they happened yet? No. There's an intersection of one that's very obvious, which is at 6. That's also going to intersect the daily 180 at the same time, so it's going to be really important. There's a pivotal upward motion right there. You know, maybe... you know what? I think you just have to kind of take it for what it is. So yeah, this could be like a move to like 680 or something that comes back down pretty far and then rebounds. And I could see that. I know I've said that this could be potentially happening into elections, and now we're talking about potentially happening after elections. It really doesn't make a huge difference because distance-wise, like, it's not that significant. You know, 1 week here is not a significant price shift. So it's not, in this case, it's not a big deal. If it's a week off, it's a week off. You know, for you and your options, I don't know why you would want to cut it that close anyways, unless you just have long dated stuff that you haven't messed with. But this is maybe how I would see it in terms of that waveform coming up, jumping that, and then jumping it again. This is where you'd see like the major M shape. I think that would make sense. But the ultimate top trajectory comes from the middle. So the middle interaction would need to happen in order to advance to the top. And I think it's probably going to happen around that orange line. So GME likewise down about 2.4% today. So last week when I had a lot of visitors, I think from the Casey Shaw channel, I felt like I was trying to explain this to maybe help those folks who are newer understand why I would think this would happen. Unfortunately, maybe when you look at the timing prediction of it, you're like, well, there was no adequate timing prediction, Booksy. The timing was like off. Well, yeah, it was. And I think we talked about this creek being really weird. So what ended up happening is this ends up being kind of like a inverted pivot. So this is like a point of interest right here where you could have a turn. Instead, it represents like the top of a wave kind of bubbling down, which is interesting. We've gotten to this point where I'm starting to just not worry about it, but I understand why some people might get frustrated by that because you're like, well, that's dumb because it's like way later. Yeah, it is. But ultimately, like, this represents probably what we've talked about before is like a pivot on the bottommost portion of a wave or the topmost portion of a wave. And it just has to do with wave structure and being like not necessarily written in stone, where you have ups and downs. And so the direction here was pointing down, but instead they took a path up, almost like a detour, right, away from that downward path, right, in order to redistribute, unfortunately. And they did it across that massive, massive creek body. And so one of the concerns I had all last week was that you really can't say much of anything here until you advance. There's nothing really to say. You have these push-ups that are classic up thrusts that just continually kept pushing up, but then selling down to lower lows. And you'd already left that upward channel. You had made the jump here, but then it wasn't advancing beyond that major creek coming down, which they've classically been distributing against. So last week I was warning that I'm thinking that could be a distribution. And we did. We got like a solid 4 or 5 up thrusts, and then we came back down. And my estimation, based on what we saw last week, was that we'd come to about 2076 at least, because the bulls were trying to avoid going down there right, as much as possible and push down. But for whatever reason, the bears had it written in the chart early on that that was where we were going to kind of build out. Now, unfortunately, as you can see, very, very visual, like right here, it looks like it's like kind of a waterfall. You hit that and then just kind of pouring down through there. Well, the reason that you're going to see that big sell-off through here if it doesn't hold is because this is also like an uptrend. So there's a much larger uptrend that was occurring from back in September on the 19th all the way through October 9th. And that uptrend is like this wraparound that's happening from this yellow line coming down, which I've talked about as kind of like the center of the wave. And we did check that, but what we didn't do is we didn't come low to check the bottom of the triangle. Now, it gets a little complicated after that because you're like, well, what the heck is most important then? So you got like 6 patterns going on. What matters? It's really only one pattern, in my opinion, and that's like the wedge. The only other thing I'm looking at is the waves. Like, so wave up, down, right? And then when it came down this time, it just didn't go to the bottom of the triangle. I'm just using this as the anchor for that wave for a number of reasons because I think they're anchoring it on this kind of super big macro, if you want to call it, super macro, whatever you want to call it, downtrend. I think that's just where it's anchoring, right? So they created this massive, we had this massive, we all participated in it. The market has this massive push up in May, and then we distribute, right, with some pretty big up thrusts, right, to get sell off back above 42. And ever since then, we've been retreating away from that, pushing down as much as possible, although bulls have been pretty resilient in creating higher lows, and we're elevating those higher lows going up to about $20. And there's an intersection maybe around $20.20 or something like that. When you look back, there's 2 very important trends that are being met. One is this downward trend, 2 very important levels. One is the downward trend from the very top, and there's a system of parallels. I've talked about that. Each one of those was checked on the way up. And then we're on the top one right now. We're kind of coasting along it. So it's like creating a barrier for us to support. The other is this pocket between $23.10 and $26. And that's the other thing we walk down. So that waveform is wrapping both that downward trend, which is, again, that's like a parallel. You could call it a creek if you want, but it's wrapping that downward. So it's kind of using that as a guidance. The market's kind of gravitating, like bulls want to hold that probably because if we do, it advances. Bears want to break it because if they do, then it advances the other way, right? So it's this kind of invisible wall. But in the meantime, they're using that to kind of walk down and distribute specifically right here above $24. And I thought it was really interesting because Ryan Cohen did the offerings when it came above and not before then. And then we had like a year plus where that was the anchor point. You can see the massive wave around 24. So we're essentially iterating this gigantic, we've talked about this before. We've been iterating essentially the same thing we were previously back here, right, to some degree. And so it's interesting to me because I'm like, yeah, it sort of looks exactly the same. Like there's a walk down, there's a big push up, and then there's a walk down around 24, and then it's trying to push lower and break some kind of invisible barrier on the bottom of that wedge, so on and so forth, okay? We don't know if it's going to be hyper successful and it's going to distribute or if it's going to be good for the bulls and we're not going to break that and we're going to pop and really, really go. We've got ideas about what could happen in either situation, but when you zoom back in, then it just like kind of puts into light what's happening here. Like, oh, okay. So we've been having trouble getting back up above 24. That's a big ceiling for us. This blue region, right, that Booksy marked off is super important because we've been knocked down below here. However, important to note is that if you look carefully, you can see that there's a wave that looks like it's trying to build out, possibly, right? Trying to build out here on like a lower wave, right? Where this could be like a high, low. There's a possibility here that if it can hold, that you should then get a higher wave, right? Now, the issue is that it hasn't crossed the creek, so that's a problem. That is an issue. It needs to jump the creek. If it can't jump the creek, it's going to dip low for liquidity, and then maybe it'll try with like a spring to jump the creek. But right now, like, that's important because inside of this massive structure, you can visually see that waveform completing. You guys are like, I can't see anything, Booksy. Your chart's too messy. Too bad. Get better eyeballs. Just joking. I'm joking. That's the wave right there, right? And if a waveform breaks out, we talk about that middle portion, and we're seeing it on RSI, by the way. It's there. There's a cross up. This should then advance, right? We're just having trouble with this final push. So when you look at the wave altogether, it's like, yeah, it's pretty much complete. It just needs to make that last push. And then there's like a huge amount of space, even from here, like 21 all the way up to 25, I think is going to be a pretty big push. And if you get above that, there's really no ceiling until significantly higher. I would suggest to you not until about $30, and then beyond that, probably like 50. I mean, it's a really, really big potential. I guess we could argue that it doesn't come up past 37, but I think it would, and then come back down again and try again. My point being is that there's a pretty simple, straightforward way of looking at this and seeing what's happening on GME. It's almost easier in some ways than AMC because it's like, yeah, it's just trying and trying and trying. And locally, sure, like if this comes down and it breaks below the support at 2050, it's almost too easy. You can kind of see like, yeah, probably comes down to 1994. I have this kind of level marked off as a bottom, but you can see why it would happen. Probably come right back down here to 1994 or something like that. That pocket right there would make sense to me for a number of reasons. And then it would try again, and that could be it, you know, going into November. If it breaks down, then I think that you're going to come low to like 1867, and that's probably in the event that it doesn't hold up here. It just can't hold the there's not enough buying to hold it up, and this sell-off is enough to kind of bring it down in terms of a, hey, have we got enough sellers now to take it low on these two distributions? So there are some similarities, which is that they're walking down the tops, and it's going to pop if it goes the other way. You know, I heard there was some, like, I don't know what you want to call it, just like negativity in our Discord at one point, and it's kind of ongoing, on and off, right? People get kind of bummed out, and then they come back. And usually there's like one or two guys that are particularly negative. But in this case, they were posting something. It was something about like, TA is based on this principle that what goes down must go up. And that's all people are saying. They don't think anything else of it. They just see it as, oh, it's going down, therefore it's going to come back up. And what I would say to that is that unless it's a stock that's specifically going to go bankrupt and that is being shorted to death, and we know those stocks, right? Most of us have experienced at least one of those in our lives at this point. The concept of TA is based on reaction to downward pushes. It's based on cause and effect. If you look at like Bulkowski's methodology, for example, the whole idea of measuring a bottom and getting a price target is this concept of like you're building a cause, a reason to go back up if you were coming down, and vice versa. If it's a top, you're building a reason to come back down. And the idea that stocks go up and down is just waveform. It's just waves. Do stocks travel on waves? The answer is yes. So I almost kind of chuckled under my breath because I was like, well, you're not wrong. Like, TA is built on the principle that what goes down will probably come up and what goes up will probably come down. And that's just the nature of the market. Like, it moves in waves. You buy up until you can't buy up anymore, and then you distribute, people sell. And that's how it works. Supply and demand is actually principled on the idea of that interaction between tops and bottoms. So it's like really strange to me that that would even be an argument against TA. And so when I was thinking about this earlier, I was like thinking about how like, well, this idea of like a slingshot is the same way, where you're pushing away from something in order to come up. But just because it happens doesn't mean, and you can kind of predict it if you know what to look for, it doesn't mean that it's somehow like elementary or something and it doesn't actually work. That doesn't, it's a weird thing to say. So I thought that was a really strange argument. Like, I don't know, man. It's like saying you drop an apple and gravity pulls it down. You know, it's like, well, yeah, I mean, if you throw it up, it's going to come back down. But the idea of like that being a reason that TA doesn't work is kind of silly, because it's sort of the reason that TA does work because of supply and demand. It's like, I think the argument was that, like, oh, that's not really what matters. What matters is what's going on underneath that, like what's going on in the options chain, what's going on with all those derivatives and like things like that. It's like, well, yeah, but visually, like we don't get any other representation of that aside from the chart. Visually, like you can look at that data in an options chain and you can see and read that data, but in terms of like a visual representation of that, the chart is it. I mean, that's the price action. There's a lot of different ways people chart, but that's it. The whole idea of putting it on a map is so that we can see it, you know? So it's just funny to me to like knock it because people are using the map and not necessarily looking at all the underlying data all the time. So I find it to be a bit odd that there's a sort of a constant argument against TA for some really weird reasons. Yeah, I don't know, man. It's like, it just doesn't make sense to me. But I thought that was kind of funny. It's like, yeah, you're not wrong. But I don't know why that's an argument against TA. So like in this case, it would be like, well, what's stopping this from just continuing going down? Why do you think it has to go back up? I don't think it necessarily has to, but the thing is like the reasons for it, this is not the reason for it. Does that make sense? Like I separate the two things. I separate the idea of like a reason for something versus just a line on the chart. The line on the chart shows you what's going on with supply and demand. It shows you a trajectory of where that level may be. If there's a support and then a subsequent resistance and it's at an angle, then it tells you that somebody lost a battle somewhere. You know, it's like when you're tracking a bear or something, you're following the footprints, you know, and then you see like there's an interaction and the bear was going towards the water. He's going to get water or he's going to get salmon or something. I don't know what kind of bear it is. And you're following bear tracks and then there's an interaction that happens and the bear turns direction. Well, yeah, like immediately that doesn't necessarily tell you that the bear is going to end up at the water. But what it tells you is that the bear needed water. For whatever reason, it was going to this place that it like wants to go to. And it's been there before, right? And it wants to go back there, but something diverted it. And then you're waiting to see if it can eventually make that return back to the water. So if you were hunting that bear and you were following those tracks, you might at some point think, maybe it's better for me to think about it meeting it at the water. Like that's probably where it's going to go back to when whatever's happening is done. Now, did I just compare the stock market to a bear? Yes. But at the same, you guys are like, I don't want to be bearish, be bullish. Fine. It's a bull going to the water. All right. It doesn't make any difference. I just picked a bear. My point is that like, the trajectory itself isn't the reason why. Like the trajectory is just showing you the tracks. It's the animal heading towards the water. It's a directional thing. There you go. It's an emu. There you go. Emus are completely irrespective of the bear bull narrative and the donkey elephant thing in America. It's just an emu, okay? Or an emu, whatever you want to call it. Emu. I don't know. I always forget how to actually pronounce it. Point is it's heading that way. That's all that's telling you. That waveform analysis is incredibly accurate if you understand that it's not necessarily inevitable. If you understand that it's not necessarily inevitable, then it doesn't become a question of, am I a fortune teller who's saying that this has to happen? If you think you're a fortune teller and that this has to happen, you're probably in the wrong business, right? Because the market's not based on what you think you've divinated or whatever, you know, from your tea leaves. Like that's not how it works. It is based on whether certain conditions are met. And eventually, if you want to go back up, demand has to outpace supplies. But in both cases, like you have trajectories. That's the fun part about the market is that like, well, yeah, we've got this case for a bearish push or for a bullish push because that's where it would want to go back to. Guess what? Bears have the same case. They've got the trajectory down that they've kind of waddled off from. And now they could come back to it later. It's really low. I talk about creeks going both ways. All those are footprints, right? That's just the direction that they were wanting to go. They, meaning like the majority of that side, wanted to head that direction. They didn't accomplish that. They got stuck here. There are people that use that exclusively, and they call it like, I think it was, I remember the guy Ivan in our old Discord and call it like an imbalance. Like there's this sense of like, you've come to this place and then you move away from it and then you come back to it. He used triangulation methodology and it works really well. It's the same concept with the waveform, that's where it would go. So that particular part of the TA here, the pinning of these markers, those are doors that are open. We know that's where the water is, the watering hole, if you will. We know that's where it's going to go if it breaks and it accomplishes what we think it could accomplish. Everything else is based on, I don't know, like in terms of like, again, whether that's probable. Is it probable that it does that? It's an amalgamation. It's a bunch of different things. It's a giant jar filled with billions of different data points that you can use. And you get to decide which ones are most important, which ones you're going to use as a TA person. You get to decide what you think is most valuable. Basic things like RSI are super valuable. When a stock is really oversold or really overbought, it tends to like to change direction. When it's like that for a long period of time, something else could be going on. When it's like that on a higher time frame, could be a higher probability of a bigger move. Those are all things under the same umbrella of technical analysis. They're not just indicators, there's other things. Volume is an indicator. It's the biggest indicator, right? When we talk about Wyckoff, we're talking about psychological kind of understanding of trading pattern. Does that mean I'm reading people's minds? No. But we know based on observation the way that operators tend to have played things out in the past. So you use that information too. That's what makes TA so valuable. And that being said, when I look at stuff like this, I'm like, look, man, I would love for this to break out, but it hasn't done that yet because it keeps rejecting. There are some signposts that happen before a big move. And we were talking about that on AMC a little bit, and it came back down low. We need to come back to AMC and check it out. It came back down low, which we were thinking might happen. There are some signposts that can help you to to find out, like, is it about to be done? And like we've talked about it, like these are confirmations, things that we talk about that show strength in the chart, that show strength in a bottom. When you're going in to get a gap fill, is it better to do it earlier or later? Well, earlier in this case is more bullish. That's a good thing. Like it's better for us to get down there right now and hold that and then push away from it than it is to wait later when you're breaking through the ice. All of those things add up and can give you a really clear picture. The goofy stiletto heel bottom that I talked about, that's a really important one. There's a huge divergence on RSI, and then you've got this beak-like formation. Yeah, it's a visual thing. There's a little bit of data thrown in there. You're looking at levels as well, like where are you moving from one level to the next. I don't find that to be like hooky science or something. Like it's not some weird mystical thing. It's just mathematics. It's really basic. Like this move being a reactive move back up to check that level was pretty by the books mathematics. And it's simple enough to follow. Does it mean you have a bigger breakout? Not necessarily. You have to then look at the bigger picture and see what that does. That's all we're doing here. Okay. So I found that to be really funny. I wanted to just kind of share that I don't know what it was, what you want to call that. Somebody thinks it's advice, like they're helping people not drink the Kool-Aid, even though it's not Kool-Aid, it's just math. And they're like, oh, don't drink the Kool-Aid of TA, man. It's like, well, Nobody's asking you to drink Kool-Aid, you know? Some of you guys are like, what the heck Kool-Aid got to do with it? I don't know what happens in other countries, but in our country, cults have, a lot of cults have like done like mass, it's really depressing actually. They've done like mass suicides and stuff by drinking Kool-Aid. The idea is that you're basically like taking whatever it is the leader's giving you and you're just going to your own death. That's the analogy there. That's not what TA is supposed to be about. Sorry if that was like rubbing some people the wrong way. That analogy's over. But point is like, I don't know, some people think they're doing you a service, but really in some ways it's like, yeah, you're kind of just missing the point, you know? If you're trying to like convince me that TA is a waste of time, okay. But I'm not drinking Kool-Aid because I don't think that it's supposed to be perfect prediction. I'm looking for certain things that are strong confirmations, like a buildup of cause and effect. So yes, do I think that the cause and effect on this will be massive? Yes. When we talked about that PNF buildup for the cause, we talked about even offsetting it gets you to like the 13s if you got down to 350. It's a very big cause built up. And I don't care if it gets all the way there or not. It's still there. Like the potential is still there. So I don't think of it as a light thing when I sit here and say to you guys, I think it could run 200% in a matter of weeks. That should never, ever, ever be a small thing, you know, for anybody to say. But do I think that that's what could potentially happen right here? Yeah. I'm not going to be shy and apologize for it. You know, if I think it could run 200%, it just has to meet the right conditions and it will go. The problem with, I think, what a lot of people have is those expectations aren't met in the time that they're met, and you start doubting the person that's delivering the message, and you're like, well, that's garbage. You know, obviously it's fake or whatever. No, it's just not taking that path. And I'm not ever claiming that it will. Like, it has to do that. It doesn't have to do this. So then the question of why, like, is more of a question that you can answer through stuff like, well, maybe the options change, but also, what the heck is the operator doing here? Why would they have done this? And that's the bigger question that a lot of people are not really asking. I mean, for a lot of folks that don't want to do TA, the why is always the same answer. It's always because the hedgies are effed. You know, they're messed up. They're not in a bad position. They got to cover. Really? Like, we're below where we started. Like, they're not in a bad position. Why else? Talk to me about this range. You know what I mean? Like, talk to me about the positioning between 11 and 2. Like, what happened here? Why did that happen? Oh, it's just dilution. That's why we're down low. Okay. Maybe you might be right about some of that, but like at the end of the day, why would we go back up? Well, we go back up to test supply. What supply do we need to test? Probably around the 10s to 11s. Why? Because it's a huge range. This was a massive reaction off of a bottom. Do you think they want to go back to that bottom again? Maybe. They got a lot of buyers there. They might want to go back. Do you think they're going to achieve that? I don't know. That's a bigger question mark, you know. But those are like good why questions. You're talking about liquidity and the liquidity needs and the movements of the chart and stuff like that. None of that stuff, like it's not, like, so guess what I'm saying is it's not particularly married to TA, like that it has to be this way, but it's more of like, I don't know. I hate this analogy. It's like consenting adults, I guess. I don't know what the better way to put it is. There's a relationship between the two because one is kind of showing you again, which direction would you go if this happened? How would that build out? What would the possibility be for highs? The other one is the question of really motivation, like why would we do that? And if we do want to do it, then how do we get to that end, right? How do we get to that confirmation point where then that fulfills? But it's a question of like, it's a question for algorithms and computers that we don't, as retail, all we can really do is look at the breadcrumbs. And that's what we're trying to do. So I think it's a good thing to think about. But I also think that it's kind of silly to like be like, why would it do that? It shouldn't do that. Well, I've said the same thing about people who say it's going to rocket to like 30 or 40 all of a sudden. And I'm like, I don't know if it'll do that because I don't find that to be as strong of a possibility based on the TA. And then also, that's just probability. And then also, like, the Y doesn't make sense just yet either. I feel like if you're going to do that, you should first check this creek, for one. We haven't even checked it yet. And then two, you need to make sure you break the top at 12. And then three, you have this kind of unresolved gap and this liquidity that was never checked around 360s and 350s. It just feels like there's a lot missing before a major advancement. So I find the Y for like going up to be less convincing than what I've suggested, which is that probably going to trade out this range more. And I could be wrong about coming back down. I'm comfortable if I'm wrong there. It really doesn't bother me at all. I've gotten kind of used to that argument that, oh, I don't think we're going to come back down to twos. Like, okay, you might be right. I feel like there's a good enough reason for it, and that's why I think it's on the table. Don't eat the dogs. Yeah. Jackie is calling for downside around 15 to 18. Anyways, I'm done bantering with myself. IMRX. Yeah, we can check that out. You talking about GME down to 15 or 18? Yeah, maybe. I've got a level down here around 16 if it breaks that red, and it also breaks 1877. But I feel like it's possible if this doesn't cross up and then it has a hook here. But I wouldn't suggest it's going to happen just yet. I said the same thing back here at like 18. Remember when we dropped down? We started going low, and I remember saying that I didn't think it had to go down that low, and it did. But even at that time, people were calling for like really low lows, and it took a lot longer. Part of the problem is that when you see that stuff, I think there's legitimacy to it. Like he's probably, I don't even know who it is. I could tell you right now that the 1740s area was called out by a lot of people on our channel a long time ago. I have a strong opinion about it, and I think that it's a legitimate, there's a legitimate reason why you might do that. When I look at this as a build out, what I see is like towards the downside, I mean, what I see is, again, a potential bear flag if it does flag, in which case, sure, like you could have a pretty big drop. I think early on, we were talking about like 12 or 13 coming way down here. You know, if you look at where this earnings is out in December, you could make an easy assumption that it's going to walk down to $12 and come all the way basically back down. You can look at this as, say, it's a gigantic retracement and do like a fib retracement and see where that goes, you know? I mean, there's a number of things you could say. Right now, the fact that we're sitting at 20, 30 or whatever, we're basically sitting on the 618. We're essentially in like a golden pocket right now between 0.5 and 6.5. So there's a lot of things you could say about that. You know, you could suggest that, oh, I think it's going to come down to 13 and this and this and this. I don't know if there's any illegitimacy in those claims. There's probably some legitimacy in them, but those levels have been there from the very beginning. When it first started dropping down, there was a lot of creeks that were establishing, like, that were pointing really, really low. I mean, they were significantly low. So do I think it's possible that, you know, it goes there? Sure. Sure. I think that at this point, it's not really about whether or not something's possible. It's really about whether it's probable. Is there a good reason for that to happen? And if there's a good reason, like, how would it get there? Right? Because like right now, we did the checks and stuff on AMC. We didn't do them on GME. Right now, it's like, sure, this could be like a flag. But I could also see it as like a wave bottom. We just talked about that. Like there's a double bottom potential right here. It could go back up. if it were to go back low, is it possible? Let me ask this question. Is it possible that it comes up high and redistributes first and then comes back down? Some people are going to be like, nope, that's not possible. Well, guess what? I think it's possible. Why? Because it's the same thing that would be set up on like AMC. Like, is it possible it comes back and redistributes from 30 to 45? Yeah, why not? It's done it once. It could do it again. If this is just a wave out, then that makes perfect sense. You know? I don't find that kind of stuff to be particularly like difficult to believe. I think what's challenging is when people think they get the low target and they think, well, it's got to go down now. Then you have to make an argument for why it would do that and how. One of the things that might be difficult, maybe, it's not that difficult. It's harder on AMC. On GME, there's definitely a lot of potential here for downside. I'm looking at RSI. Like, there's a plenty amount of space to go down. I think on AMC, that's a harder case to make. Because AMC, yeah, it could go down more, but it's not like, I don't know, unless they prop it up first kind of thing, I guess. That's what I'm thinking about. Maybe if this were going to go down again, it would have to be because they're propping it up. Maybe it goes to 6 and then it drops real low. And that's a possibility. So that's the question of how. Is it possible it goes low and it doesn't ever see these highs? Yeah. How would it do that? Probably going back up first to 6s. That would make more sense to me, to like cool it off and then give you a fuller distance. I'd say the same for GME. Do I think it just drops straight down to, I mean, it could. I'm not going to say it can't do that. Maybe the idea of it coming back up to redistribute has been a bear or a bull trap the whole time, you know? Yeah. I like that APO or APO-D. That's cool. You really see that wedge here on that RSI on GME, huh? It's interesting. It looks like it's kind of coming back around that 50. Again, similar to the marking of where it took off back here in May. Very similar. And interesting because AMC didn't take off till late May. And this was already like overblown by then. It was like already at the top before it had those big moves. But comparable nonetheless. Similar levels. So sure, could it hold here and drop? Yeah. I just think it's more likely it would do some kind of a pump to 24 first. Just like AMC. Like, it feels like if you're going to take it that low, that you would use that as an anchor, like a 50-50 around it. This is one of the things that I find interesting about some people in TA is I did this a little bit early on, but like nowadays I kind of just accept it as a fact of life. Sometimes those targets that you get are you're gonna kind of navigate to them differently. One of the things, of course, being that often you go up before you go down before you go up. Right now, we've been going down for so long, it feels like it's got to relieve pressure to the upside. That's why I'm saying I feel like there's almost like a somewhat of a need to go up and have some kind of a distribution element. And distribution doesn't happen really low typically, it happens high. So, because you're going to sell shares. If they think that, imagine if you're like a multi-trillion-dollar company or multi-billion-dollar company and you think that this is going to go down, like you're probably going to want to drive the price back up and sell your shares high. It's that simple, you know, and a short benefits from that because they could cover and then re-enter at a better price. So like distribution and is the concept of it is, of course, giving your shares to, you know, It's like weak hands to strong hands almost. It's kind of strange, but it's sort of backwards, right? Strong to weak. Anyways, point being that like you're giving them out, you're letting them go, and in order to do that, you need to have buying pressure. If you got millions of shares that you're trying to let go of, so yeah, like it's possible that somebody gets trapped in a bad situation, like a huge fund, and they have to sell for a loss. But most of the time, if they're buying up, it's because they're going to push it up in order to sell that higher. It's just the laws of supply and demand. I don't know. It's simple. So I don't doubt it. The folks who may say that it could go down low, sure, I could see that. We talked about this before. It's the same area. Everyone's saying a pop to 6 is depressing, LOL. Why only 6? Nobody said only 6. Well, I didn't say necessarily only 6. Is it possible that it just hits 6 and then comes back down? Yeah. It has to do with what we're perceiving as buying pressure in a moment that things are getting kind of volatile. If you talk about the move to 6 is the top of the range. You might take it back up there to redistribute. So people that bought in back here in May on the 15th, there's a lot of filings after that big pump. There were a lot of filings that were put out in May, on the 15th about AMC buy-in. So it would be a place that you could come potentially to distribute. And yeah, if your goal is just to get you down to like a modestly low level, maybe it's not to get you down all the way to 2s, but just back down to that gap, then it's sensible. You look at the gap and you look at 6, and you can see like this is essentially like a 50% marker right where we're at. So it would be sensible to kind of pump away from it and then come back down through and do a big, gigantic kind of double flush. And typically we find that those 50% markers tend to be fairly accurate. So yeah, if you're going to distribute and you're going to pass beneath where we are now at 420s, it would make sense to come back up and unload your shares up here between 525 and 6, and then come back down through and do like a 50-50 swing around 430s to get you down to like whatever, the gap. But all of that is just, again, speculative because we don't know for a fact that the operator wants to do that and go down low right now. And I've already talked about this repeatedly, but like you can do the same moves on a bigger scale and we have enough cause built up. So do I think that the only solution is this? No. There's enough cause for this to go to $16 to $17. That doesn't mean it will, but it's there. So do I think there's enough buying? There's enough shares that have been traded here that would take them up. Yeah, they could distribute all the way up to 13. That doesn't mean they will, but it's the same thing as 6. It's like, it's probability, you know? You're going to watch those levels and see what happens. So I don't necessarily agree that 6 only is the answer. So yeah, so for what it's worth, like that's not a bad chart. If somebody thinks it's only going to go to like 6 to 650 or something like that, maybe they think it's going to come slightly above, and then they think it's going to come back down and go fill the gap. I'm probably in agreement that that's a possibility. There's a wave that could end there. There's also a massive wave that could end up here at 13, and there's another one that kind of stops at 870. So then from there, we're just looking at cause and effect. There's no doubt in my mind this could easily pop all the way up to the 13s. There's no doubt in my mind that could happen. Like it's there for the taking. The only doubt that I have is whether or not they want to pocket that for like a later move, meaning they're not really concerned about the share average here and they want to get out. They want to get shares away from We don't know that. Vanguard may end up owning 100 million plus shares before this is all over, and this is just the beginning of like a massive accumulation schematic. They may want to get a lot of those smaller hedge funds out who bought in the fours and fives, and they want to get them out, and they're going to drive the price back down. Their average may be in the threes and fours, and they don't care. You can't take everything and make it true. That's not true. Maybe. We don't know. Crypto's not exactly like gone yet. Obviously, there's a lot going on right now with like a Doge and stuff like that, which has done well in terms of its moves. I don't think it's over. I think it's got a long ways to go. It's hard to say with these kind of things, you know. That looks a little distributive to me. That up thrust right there. Then that sell off. Push back beneath 14.7 on Doge. That's okay. It's one of the levels we were looking at as a possible place to stop. This could be a big buy-in though. There's also an M cross here. Wave 1, 2, and then 3. There's a lot going on. I've been talking about Doge a little bit because of the potential there. I kind of screwed my math up on it last time, but so far it's fine. It's jumping creeks and holding them, so that's good. So then the next creek up is right here. It just kind of widens. Simple. You can draw a curve if you want. But yeah, Doge could technically come all the way back down to like 12 or something. It'd be fine. Maybe not that low. Maybe more like 13s or something. It'd be best to find support right here on the next jump. It does look like it's getting a little parabolic. We talked about this just a few minutes ago. Not really. It was like an hour ago on AMC. But that parabolic move that happens on AMC sometimes in that buy up, and this is what I was expecting on AMC on the big scales. Sometimes you get that cross and it comes up. This would make sense to me, and it actually looks about right. So, and then the reaction is usually about the same as the intro. So for Doge, when it gets to the top, assuming that I got the top right, and it goes to like probably 18 cents or something, I think I got it right. I think it's going to make a pullback, yeah, to like 13. I'm not sure if it'll check back first and then go. Who knows? But I think this is roughly what you're going to get. And then it should just take off if it can find support. It looks a lot like an election run, but we'll see. This isn't the only thing that could happen. I think it's just one of the more likely things. So, well, you believe whatever you want to believe. Obviously, you know, do I think it could hit high highs? Yeah. In terms of, again, just a technical breakout, is this percentage run significantly higher? This goes up to $10. Is this technically higher than any of the other ones? No, it's not. I think the number itself may be a little psychological because passing $1 seems like something special, and we talked about this before on the channel. But I feel that if you look at the channel upward, like, no, it doesn't have to repeat, but is this a bigger move than previous moves? No, it's not. Like, it's 7,000%, which sounds ridiculous, but the same thing could have been said back here when it ran 9,600% or when it ran 18,000%. I mean, like, it's not actually a very big move compared to the last two. It's smaller than the last two in some ways. So I feel like, yeah, like there might be a little crazy to say it could go to 10, but it's there. Visually, that's it. Like, that's the channel. Maybe it tops off above $1. If that's the case, it's in distribution, perhaps, right here. You know, if it's trying to just sell off at 75 cents, we don't know yet. And that's the same as back here. Somebody saying that they thought it was going to go from, you know, I'm going to skip the zeros because it's like 00013. or 0.0002 from that 0.0002 all the way up to 0.0004. I mean, it's an astronomically high move, but someone could have looked at that and said, I don't think it's going to go more than 1,800%, and then it's going to distribute. Like, they probably could have looked at this and been like, it's not going to go anywhere. It'll come back down, you know, and cat here. Well, yeah, we could have done that here as well at this top around 17.017, and it could do it here around 75 cents. So do I think it necessitates reason? Maybe. But at the same time, like, the move itself is not astronomically high. It's not. So if you're thinking like 6 to 8's high, really $10 is not even higher than the last two major moves. And it's within the channel. So it's totally possible. That's the wave. Like, this is the wave cross right here from the bottom up. And it goes to around, you know, $8 to $10. So it's crazy. Yeah. I don't care. I mean, like, I understand why you think that's crazy. I think it's kind of crazy too, but at the same time, it's like, this was crazy. This was 12,000%. This is even bigger move. If someone said that they thought this was going to move 12,000%, it may have been less unbelievable. When you just look at the numbers, you're like kind of ignoring the fact, because you're like, oh, it's not even a penny. It's 0.004. It's half a penny. But the idea of it going from half a penny to 75 cents is actually a much bigger move than going from 13 cents to $10. So for you to look at that, I would just suggest that you look backwards and say, like, well, if this, then this, because I don't see it as, it's really not a broken move. It's just the way it is. My bigger concern is that they're going to distribute back down to maybe here, because there was no check. So yeah, if you're looking for like a counter argument to 10, you would look at this as like, oh, it could go up to 75 cents, maybe $1.50, $1.60, and then I think it's going to come back down. And someone saying that could be reasonable as well. But again, we won't really know until we get up here. Like, both of them have a pretty massive move to start. So I would just suggest you enjoy the ride. I think it's probably going to go to $1 plus, maybe even $1.50, $1.60. And then I think from that point forward, we don't know. It just depends. And I don't think it's really worth worrying about too much, you know, unless you're just like really bent on getting to this really high. It's just there. I genuinely don't think it's a problem. So, yeah. Yeah, so we're going to check out IMRX. I was told not to look at what the ticker means, so I won't look at what the ticker means. I'm going to do my best to kind of eyeball. Does this have earnings on it? I'm not seeing anything. Here we go. Okay. You could have made 600. I would have made 600,000. Yeah, would have, should have, could have, I guess. For most of the market, most people didn't. A lot of people didn't believe in like Bitcoin and stuff like that, you know. And a lot of those guys took off, and there's a lot of shoulda, woulda, couldas. I don't really worry too much about that stuff. If you took it out, you took it out. I used to worry about it, and AMC kind of broke my spirit about some of those things in a good way. In a way that's kind of made me a better trader, is just stop worrying about it. When the trade is done, it's done. If you missed out, you missed out. Well, yeah, so IMRX is kind of a decent play. I think in the long run, so I'm going to tell you what I think is going to happen here, but I don't know, being as close as it is to pancreatic cancer. So I don't know, with it being as close as it is to elections and stuff, how that might affect this. And there's an earnings coming up here, so I can't really ignore the sector though, because a lot of these like R&D pharmaceutical type places, they do really, really well when they're given like FDA approval, for example, which is probably where this is coming from. And then they're difficult because like, you look at earnings, it's not really giving me a lot of information, is it? Like, there's no revenue reported. So I don't know. It's interesting. This is very similar to like what we talked about with like WTO. Remember we were talking about this? I hate to compare the two, but they're kind of similar because on WTO we got that initial drop in, and some of you guys are like, man, I'm so sick of these high heel things. They so far haven't really been working out. Well, they do work out, but sometimes they iterate and take time, and it stinks when they do that because it does take longer. So you did get a simple kind of version of that here, and then there was another, you can see the secondary double up thrust, and it sort of like keeps doing the same thing. Here it is again, another double up thrust, and then it keeps walking down. And each time it does this, it's widening and it's kind of having a little bit of trouble, meaning like it's bottoming. It's having trouble, so there's a weakness right here, and there's a push up, and there's a drop again, weakness right here, push up, drop again. It probably did something similar, and then it finally recaptured. So when I look at stuff like this, thinking about like what were the levels that we're walking through here, 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 and here. And we were talking about this on WTO recently because we were talking about how it looked like it was finished, and then it just did not finish, right? It kept going, and you're like, well, this is really frustrating. Is this going to ever turn around? Am I wasting my time, my money? You might be. You know, it's never a guarantee, but you can see where those levels are pretty clearly. And so you can see that pattern appear. And then when you go back and you look at stuff like those hook values, you know, like the initial ones here, like they're never met. This is like way out here. This guy is though, like this is pretty darn close to being met. But what's confusing is it doesn't meet it at any obvious preliminary support level as far as I can tell on the daily. Instead, it goes back to the bottom over here is a triangulation. So the waveform does have a move out and then back up, but it's long form, like long distance. And then maybe even more telling might be something like here, weird as it may seem, it seems like there's another middle parallel, perhaps. I only drew like these on the outer side, because that might actually be a better indication of where that wave is going from. Like there, yeah. This. So you can see that wave out is kind of confusing. It's just like no real clarity about distance on it, which means that I wouldn't have been able to measure it. That's what I'm trying to say. Like, I wouldn't have measured it correctly. This would have, what I would have done probably, is I probably would have looked at this. I don't think I would have done that. I would have done something like this and said that I think, actually it doesn't look that off. I think the wave is going to go early, like here, right? And this is what we did on WTO, and it didn't work. And it just kept iterating. And it was like, why didn't the wave, this is almost the exact same thing, isn't it? Why didn't the wave come back up on WTO right here? Remember, it broke down and it went into like a lower, I don't know. And I look back at stuff like this, it's hard for me to like ignore it. And I think we used like a different methodology on WTO because we used the bottom, I think, or we used one of these lower portions. It was a similar workout though. Like, it should have been similar in some ways, and it kind of was. What's bizarre is that maybe we can go back and look at this timing. We can see something, but what do you guys see? I don't see much. It kind of looks like it's here, like on the breakdown. That's a really bizarre place to draw like a middle, but that would have been like the best timing wise. Like maybe that would have been the best middle to draw. Does that make any sense to me? No, not really. Like, why did it start there? Almost like reset. And I really don't know why. I just don't. So maybe it has to do with this wedge right here that formed. This is the beginning of it. I just don't have a really good reason for why that went the way it went. So my point in saying that is that, like, I think sometimes it's really obvious. There's some kind of an obvious creek intersection. It looks like it's going to get there. Sometimes it's just not. WTO is doing kind of the same thing this one did, which is it went down into a wave and then it looked like it was going to break out here, and then it failed. It failed to hold it and it went lower. This is very similar, and it dropped down and it did it again, iterated lower again. WTO did pretty much the same thing. And we lost kind of the ability to see very clearly where it might go. So this might be a really good, helpful chart for that, because this is an example of one that it does the heel and then it could form a bottom, but then instead there's weakness still. So they take it up and they do it again and then again until finally there's no more weakness. And had this happened up here, you wouldn't have had that long wait. It would have built out back to the upside. So interesting, right? That happened. From this point forward, I would say it's a little bit more like what we talked about with that other one. I think it was AILE, where it comes back down and then potentially, you know, there's a lot of things that have to happen here, but it potentially can make another run for it if it breaks out. I would be very simple with this. I would just simply look at, like, this is like a wedge, for example. Look at the tops and bottoms, determine if it breaks down, where's it going to go? Probably head for that gap. Pretty simple, right? If it holds 194, if it breaks out here, the creek is very evident, so you should be able to draw a pretty simple trend line. And I would measure it like you measure a wedge, personally. I would just assume this is kind of a wedge-like structure and just say, all right, probably a 62% retracement. If it breaks out, seems reasonable that it could come back up to at least 336. And then I always ask the question, like, if it comes up to 336, why would it do that? There's usually a good reason. Assuming that it did do that, I would think that the reason would be self-evident. So I always make sure that I check it. And I think it's as simple as this. There's a marker here at 326. So it's probably adjusted. And you can see they distributed right there. So it would be like a retest. So this could have a rebound in order to sell back off as high as like the threes again. So maybe $1. And And then I wouldn't necessarily trade it any further than that. If it did break, cool, and if not, then I probably wouldn't touch it. So I said this is kind of like an interesting case because I think with AILE, it went up and then it did the bounce. I never checked it again later. We talked about potential for breaking out, and it had to make a jump over. That's interesting. I was pretty right about this at first, but then it kind of went along. It got kind of sloppy, didn't it? So I remember calling out this move here, but then it doesn't go low. It never went back below. It never checked that floor. So that's interesting because that persists. This is a higher push. This did go high. It only went up to 210. This was like out the window a long time ago. I don't even know why I kept it on the chart, because I think by the time we looked at this again, we'd already determined it wasn't going to do that. So I don't know. I left it there for some reason, but yeah, this came down. It consolidated. It didn't break down. So this is where the M cross theory that I had was wrong. So you remember when the M cross is up, it goes up. So in this case, it didn't cross. It broke out basically. So see how I thought like it might come back up, push and then push up and fail, maybe go down for a spring. Instead, it just jumped, and that's what happens when it's like pretty bullish and ready to go up. It just won't bother with the spring. So like I said like, oh, I thought it was going to go down. Instead, it just S-curved. So then it hit a top, and now it's just been kind of meandering. Yeah, I don't know, man. This is strange. It looks like it's still having trouble here. So it's formed at this point quite a while. There's a lot here. That's ugly. I mean, and that's interesting too, because it actually did come back up to that short-term wave, which is really fascinating. That doesn't happen very often, but it did do that. I really dislike when it makes that second top. So here's why this is maybe a bad thing, is because when it makes that second top, sometimes, to me anyways, it appears like a weakness because it went up on a higher volume or a lower volume and pushed higher, which is fine, but it was clearly distributive. Knocked it right back below the 180 and then continued down. It didn't go and make a new low, which is strong. So it's kind of like a counterbalance here. Like thus far, it hasn't done that. But I will say that on the whole, it looks like that's a halfway mark here. So to me, it looks like that's having some trouble. Where's the actual... Maybe not exactly halfway. That's about halfway. It might be having some issues. This is an easy one, I guess. If it came back above here, it's probably going to just go short term. We came back above 180s. Should just rock it. Because it did make a higher low. So if it breaks out, it's basically like a breakout on a rising triangle. It's kind of a weird one. It's not a lot of hits, but yeah, if it's pushing a resistance repeatedly and then it breaks out, it just goes. So you could assume some things from that. I would say it suggests to you that it probably goes to 318. But if it breaks down, it's just like a range. So you have to then look at this as like a big picture, and you'd have to wait and see if it makes any kind of sign of weakness. It's just not there yet. It's just range bound, which is kind of where I thought it would be anyways. I figured it'd probably range bound after this top. I think we called out the 170 something, the retrace back to on a 110. The rest of it's just been sideways. But I don't know. Maybe there's a bigger picture I'm missing on that. Yeah, so this looks a lot more like, what was the one we were just talking about? What's the IMRX? Is that the one we were just looking at? This is a little more similar. GDC. Yeah, we'll check it out. So it's interesting because what's this time frame? 2 hour? I know a lot of folks were kind of annoyed by WTO because it's like, Booksy, you made this weird penny stock like a focus for a little while. I got interested and now I don't understand what's going on. Well, it is interesting because I think this is giving us a decent case for like 340, which is kind of high. This never went below 1 though, so I don't know. Anyways, I just really wanted to look at this, so I just want to look at the bottom. But let me get that on the chart again. Where was that value? It's back here. Yeah, okay. Yeah, I find that to be kind of fascinating. Interesting. I mean, there might be some kind of fib significance to these, but it doesn't really matter. They look like they could be like halving it, like dividing it in halves. This just feels a lot weaker to me, and I'm thinking it might be because it's like a China. It may be because of the Chinese company, and valuations can be really different for those companies. I know it sounds a little weird. I always assume it's probably because of, I mean, some of it's political tension, but I always think it's also probably because to some degree there's a difference in the dollar value of things and what they think that the company's worth versus the US dollar bill compared to like the, I don't know, yen or whatever. Is it Japanese yen? I don't know what the Chinese money is. Anyways. Yeah. Let's see here. Yeah, at first glance, it may be sort of different looking, but I think I'm correct because the movement is in the middle of these is different, but the up thrusts are not. They're pretty continuous. So that's a widening, crazy looking thing. So when did this finally take off? Right there. Yeah, I have no idea. Where did that come from? Well, it's really that, not the last breakout. So you can make the marker way up here, like right where it hit the top. That's certainly there, but there's the real breakouts here. This is where it finally pushed across. And you can see the symmetry in it too. There was a check on it early on right here on the high distribution that happened early. And then it doesn't ever, every time it pushes above that mark, it sells off until here, and then it builds out. And this correlates with another recapturing of support. So there's two things. It's not just one. So there's kind of a brief moment right there where it jumps back up and it holds that support, and then it advances back to the next support, and it's the same deal. So you get like another advancement here and the next support. All that's really fairly straightforward. So I think what's confusing is how disjointed this thing is because of the separation and the split. We haven't recaptured anything yet. Kind of working on this level right where we're at. You can see there was a drop off here at 43 cents earlier. Yeah, maybe that's it. Maybe I've got it already. I got the divisions down. I'm just kind of overthinking it. I may have them on the chart right now. Like, that could be it. It does look like it's sort of building out that 50-50 model. So let me check something real quick. Let's take a look. Then this goes back up to like a previous trend. So this is where things get kind of dicey because there's no previous trend. WTO just doesn't have one. $592 was the gap on IMRX. I'm trying to do my best to identify I feel like it's just a breakdown of this big widening though, which is really bad because it's probably going to come back to check it in like the $1.50, but I don't know if it's going to come back in. It's just gone. The chart might be screwed up because of the split too. Yeah, I feel like I'm dancing with a intentionally confusing chart. Where's the bottom? All right, so on WTO, there was a series of downward motions. I hate to make this chart really worse than it already is. It's not the best chart right now. I feel like I'm missing information. This seems like the most important level right here. So I look backwards and I'm thinking like there's some kind of a trend down in this area that feels really significant to me. Like it's pointing towards that low. It was really early in the chart's history. Like you can see it visually as a wave around it if you want, but there's a lot of build out and it's not completed until here, like comes to anchor on it. Doesn't really give us anything else though, other than just some moderate information about the potential here. Weirdly, again, it's like right on that split value. AMC had something similar where somehow like they knew they were going to take it down and they were anticipating, I don't know how they could do that, but they just do it. And then from that point forward, there's a lot of bizarre little trajectories here and there. Top to bottom trajectories that are met. So here's why I'm a bit lost, a bit annoyed, because I think there's like too many, you know, and they're all being kind of broken and met on the way back up. There's nothing here that's clearly the main one. So I'm gonna have to just use my own, I hate to say guess, but I have to kind of guess. So if this, for example, if this was the breakout, then you would anticipate that this would have moved outside like this did back here, and then it would push out, right, and break and advance higher. Maybe. It's agreeable. What about the top? I'm just not a big fan of it, I guess. This just doesn't look like a good one to go off of. It's just messy. It's like a messy chart. Nothing holds exactly where it should. Even if that were right, I'm not sure it is. This is interesting. There's an up thrust and a down thrust way back here. That's an interesting one. That actually looks like a really strong level. It's getting this bizarre correlation to here at 55 cents. That's interesting. Now that one, to me, feels realistic because you can very evidently see the jump here and like that support built out. It generated a downward channel that didn't get met, and then when it came back low, it's like right where that reverse split is. They brought it right back down to that channel. So there's a clear reason they liked it. I don't know why exactly, but maybe this is because this is where it finally like took off. So if that's the case, that actually gives us some information, because now I have like a bottom I can go off of and a top on a move instead of just, I wasn't sure which one was the bottom. I was kind of like staring at this like, what's the bottom, man? I don't know. No, I think I know. So I followed that sucker right out. It's pretty amazing. This is such a weird chart, man. Such a weird chart. Yeah, there it is. So now I have a middle. I don't know of a better way to find the middle, so that's just what it's going to be. I think that's it. That's got to be it. Like we're talking about waveforms, I'm up, middle of the up. That's it right there. I'm just going to look at this as like a intentional like compression, and then they put it into here. So maybe this angle at 42 degrees, this will be significant, but let's see. Let's take a look. All right, yeah, there's the bottom. So 42's, that works better. I like that one because it kind of goes through it. Yeah, on that reverse split, and then it rejects, checks it, and then it doesn't cross over till here, and you can see it's a really clean jump. So I like that one. That one's good. All right, this might be it. And it's a weird comparison, but it is there. There it is. Yeah. See that? There's the push. So really bizarre roundabout way of finding the, I mean, it's kind of strange the way I did that. And maybe I'd have to go back. I probably wouldn't be able to do it again. Like, it had to do with where the heck that uptrend started. So that it was a difficult question because I was like, I'm not really sure. Sometimes I would like start it from the very bottom here. Like that's where it starts. It is like an SOS here, but then it backs up and it doesn't actually cross until here. And there's a strange M-shaped cross here before it advances. And it generates this trajectory down, which is then met later. So I used that as the bottom, and then I used this as the middle, and I drove it through this peak. You guys are like, what? What? I think it's right though, because what that would be is like, that's the trajectory that you're trying to meet up with when it's not like a tangent or what's the word? Not perpendicular to it necessarily, but it's the middle cross. But you don't always have on the middle cross, you don't always have the angles. We kind of did it in reverse, where I'm using like an already existing point in the future instead of something in the past, which is usually how you do it. But I think this is right, and I think you can see it visually in the walk down. So you know, it wouldn't matter if it didn't matter, right? So if, like, you look at this and you're like, well, in the grand scheme of things, it's not working, then okay, we just get rid of it. But this seems to matter. It seems pretty strong. So yeah, so it's laying up level to level. It's come up 1, pushed again. Now it's come up 2. So you see how it's lining up with those breakdown levels as well? So right there, 1, 2. So it's walking up those levels again. It's starting to make advancements, and you can see that move right here. The next level up, pretty high. And then there's an early push. Maybe. There's a lot of noise in this chart. There's a bit of a gap zone right here, though. I just can't really ignore it. Maybe there's a fib channel thing going on here, too. I don't want to mess with that right now. Anyways, yeah, so these are providing more or less stability and resistance coming down through here. Interesting. If I use the drop instead of the wick, use like the candle body. See, this one's really clean here. And this goes up to, well, 1, 2, maybe 3. I think this one's kind of irrelevant. Get rid of that. So what we're probably, now that I'm kind of zooming out, looking at it, it looks like a representation of like the center of the I don't know if you want to call that a channel. It doesn't really hold a channel. I wonder if we could do this on like an arc, if it would work. Like multiple arcs down. I bet it would. How would you do that though? You can't do that, Booksy. It's too arbitrary. You wouldn't be able to anchor it on anything. Like that. I have to anchor it on something, so I'm using the green marker to create like a bow where it hits it. Maybe. Well, that does follow pretty well, especially here. I don't believe that I just generally don't believe that like things like we could talk about arcs or whatever. I don't typically think of them as trends, but sometimes the movement acts like one. So it may as well be a trend. I just don't usually think that's a very valid thing, because it's too easy to like manipulate this and make it do what you want it to do, like I'm doing right now. What I'm trying to do is see if I can generate a consistency, but I'm not really getting that. The distance of those two should be the same, but they're not. Probably because they're... Oh. You guys are like, who cares? I'm just thinking. Okay, let's not use that. That's a bad idea. Let's find a... that's really close too. What if I use bottom to top? It's not really helpful. This reminds me of GME. We chart on GME all the time, and it's always like a hot mess of like weird flat arc looking things coming down. I feel like I almost got it, but... So I think this recaptured the channel here, and I think we're going back up to the top here, and it's taking a long time, and I'm worried it could just kind of get over here and drop. But I'm thinking it's going to probably be around the same time this intersects, which is in October, because the rest of these also matched up fairly well. As you can see, like that's the intersection here. There's another intersection. So these intersections seem pretty important. You know, they're navigating them fairly consistently. So what I was thinking was maybe I'd get lucky. And this is interesting because if you look backwards, this particular setup, this is kind of sitting up right below it. So it'd be really pretty powerful if all of a sudden this does move up, because it takes you back above this trend here. Right now it's pinned below it. I think that's the trend to beat, guys. It sounds odd, but if I only had to pick one, that's probably what I pick to get you out of here. Just based on what happened back here, I think that's what's going on. And the fact that they came back to it at the split time right there. That they were right on that trend when the split happened. there's like an invisible wall right here. So I think jumping up above that wall, I mean, it could be now, it could be a little bit later, but jumping up above that wall would be very significant. Yeah, I mean, as always, there's like a problematic nature to widening because definitely doesn't look bullish most of the time to the upside, but I suppose it could be. Problem is that the bull pattern or the pattern like that, like a flag going up, to me it looks more like a pullback on the selling side, which always just difficult. So I think this is just a tough area. Like if it can get above here, which is, I mean, frankly, kind of what we talked about before, like needs to come back above 55 cents. But I need to get extra reasons why. So I'm just kind of calculating that as best I can. I think there's a pretty good chance it's going to go up and test that top. That was that pivot. Can't really do this like this. It's not how it works. Well, now I'm on my little WTO journey. And it looks like the day's about to end. Viewership dumped pretty steadily, about half the people that were in here before. A lot of people don't really like to hear anything except AMC and GME. So if I stop talking about AMC and GME, then people leave. That's normal. Yeah, I feel like what's happening right now is it's walking back up in this channel, this WTO pattern, trying to get back above this particular trend that I think it's very important that the market, maybe the reason why this looks so copy paste is literally did the same thing here as it did here. And I think what we're probably seeing is that after the reverse split, they just did it again. And they did an offer, or the split, excuse me, and they did it again, and there was an offering as well. So it was like 60 cents. So I think it reset things. That's probably what caused the issue and the discrepancy in the chart. Not blaming anybody. I'm just saying, like, when I look back at it, it's starting to make more sense now because that I thought this was like all one move, but it's really not. So they had already announced it. It came right back to that trend, and then that's where it's kind of picking up the pieces. It's doing the same thing. So the iteration resets, which means that the first move out of this iteration is probably going to be back to, yeah, like basically like that 95 cent, $1. That would make sense. And so you could have it as concise as this. It looks like everything's kind of happening all at once, but maybe you might get some kind of massive move up to $1 if it hits above 45 cents here, if it can hold. It would not surprise me, is what I'm trying to say, if this waves out. But if it can hold 50 cents, you might get a huge 50-cent move to like $1. But then beyond that, I think you're in a bit of a pickle because I don't know what the heck happens after that. Like there's not really any rhyme or reason Yeah, it's sort of strange. I'm not even sure, man. Maybe it doesn't come back up more than 76 cents or something. Ugh, this is a nasty chart. Well, we'll come back to WTO maybe tomorrow, but it's very close. So the good news about WTO is if you were in this and you were like, oh, I still kind of want to be in it. Look, I'm not a big fan of the rising widening pattern here. It may need to come back down to 35 cents before it goes in order to just kind of finish this pattern. So if it rejects anywhere, it's probably going to reject at like 46 or something. If it comes back down, I wouldn't flip out. I would just wait and see if it rebounds, because it could be one of those things where it moves very, very rapidly to kind of complete a bunch of different things at once. And I genuinely think if it can get back above this orange line coming down, it's probably going to be in really good shape. But it may need to sort of advance first, fail, and then try again, if that makes sense. Something like that. And I'm not sure if that can all be in October. Maybe it takes a lot longer. Just kind of eyeballing some things here. It could be a little bit longer if it meets that side and then doesn't. For example, like it could hit 50 cents and then not go further and then chill out till later, but whatever. Point is, this would work as well. I'm worried that that widening might need to be dropped before it goes. All right, coming into the end of the day, let's see what we got finished on AMC and what we didn't. I got to feed my kitty cats in a couple minutes, so we'll finish it up. Yeah, it looks okay. So about as expected. It just finished the M shape here, so 1, 2, and then it's come back down. There's enough room here. Again, we could come back down and get the gap tomorrow, guys, and it would be fine. I think if you wait too long, you run risk of maybe failing, I suppose is the better word, through there, and that could be dangerous. I would suggest it happens here or it happens on like Friday into Monday, because if you take some time, you could kind of give it like a false sense of advancement. And I could see why that might happen. So we'll wait. I feel like they could easily pin it beneath like 436 and then drop it back through going into Friday and come back to like 430 again. That's not what I want to have happen. I just think if you don't get the gap fill early, that could actually be worse for us. If we get the gap fill early, this has a lot greater potential, in my opinion, to go ahead and cross up. And this gives you a much stronger confirmation zone. This is where we might actually get to like a 450 on Friday or even higher, right? Start breaking out, like truly. So the setup here is got decent potential, is what I'm trying to say. But we got to wait it out. So looking at GME, to recap that, I talked a lot about GME and I also said very little about it. I feel kind of bad because I feel like I spent a lot of time talking about things we've already talked about, but my thought was we'd end up at 2076 and we're at 2077. And the reason I thought that was because there was a lot of connection to that 2076 back here. So again, triangulation totally works. You just have to, know that it's like footprints, right? It's like that bear wanted to go down there and go to the water. Then they took a detour and instead they sold off along the creek like crazy, right? Now, there is another detour that was taken, and that was one by bulls. And so now you have a new potential right here for a reactionary move. And that was that bull path. There was a couple bull paths right here. And so I think, sure, like the reactionary move could come back up and that would break out. At this point, it's hard to say that that would happen. But, I mean, it hit my target, so I don't know. That's as good as I can do for most days is like I'll give you a target I think I got this last week, Wednesday or something. I don't know. It was shortly after this because I think it was already coming up or it was already up here or something. And I said, it looked like it would be too fast. It was too fast. It didn't come down that fast, but it did come down. I don't believe that it has to hold here, though. So just like everything else, there's larger picture going on, and you have to take into consideration. If it comes back down, it will be retesting 2050 more than likely. And then if it breaks that, difficult to say this, but I feel like it could come pretty low. The next area I'd look at is 20. It's pretty straightforward, though. I mean, it ends up being like perfect 50-cent increments, maybe more like 1988 if you want a fun number. You don't like 20, but that's like extreme drop right here as the crow flies. RSI is looking like it might need to turn up a bit first. So again, we'll wait it out. Tomorrow, maybe the next day, we'll get a better idea if this is going to hold or if it's going to advance or if it's going to capitulate and drop. Right now, it looks like it just dropped. I mean, it doesn't look like it's holding that level to me. It looks like it busted through it, but we'll see. That could change really quickly. So I don't want to make it like end all be all kind of stuff. I'm going to check IWM. I'm going to open up because he asked me bajillion times today. And I suppose I should like honor that. Because like, dang, man, passive aggressive much? I'm just kidding, Jason. I'm going to eyeball it and give you an opinion in a minute. Yeah. We talked about IWM a bit. 221.97 is where it's at right now, which is 222 level. That was the first marker level. The second one was a little bit lower at 220s, and then it goes pretty far from there. And I think we did an analysis earlier. To be fair, I think going into an election, this could, if it does continue to drop, could go as low as 213 and still be potentially bullish. IWM's had these really massive swings. Right, this to me looks like potential for a higher distribution, like a double top, like 1 and then 1, 2, back down, and then the final bigger push with potential to go significantly higher right after elections. I think we've done this a couple different ways, a couple different times, and each time it kind of yields slightly different results because we talked about this. These iterations are kind of marking off trajectories that aren't being met. And I think a big part of that is that, like this iteration, for example, had trajectories to the previous iteration's top. And I think part of that is just understanding like, well, there's a desire for that bulls want to get to this point, but they're not getting there. And so as the patterning is playing out, you're seeing the same things kind of play out over and over. And we did a huge analysis on that like a week ago. And basically what we found was that, I'm going to have to switch this chart real quick, was that the larger structure, there's a macro structure that's significantly larger, isn't in any particular hurry. Like there seems to be a lot of evidence that this, if it does go to 250s, could be December. And then it may not hit all-time highs until next year, like after January. And so that's significant because it's pretty different than, you know, the expectation is going to rocket, but it could still hit 250s this year. And I think that's been most of the targets I've gotten about 250, 252 for IWM. They've all been kind of in the same pocket starting in October, going out into December. So I do think there's a desire, earnest desire on the bull side to drive that price higher. It's just failing to keep the traction, and it's sliding backwards. It's like trying to go forward in the mud, right? So you just keep sliding back down like the muddy hill almost. I know what you guys know about liquidity and rate cuts, and we know that in theory, yes, like the higher liquidity, the rate cuts, the rotation out of the larger, all should help boost this really lagging small cap. It's very behind. But it takes time. And so the idea of it taking until January isn't really a big deal. It's frustrating, but I think that you had a lot of people in these situations that were probably not sure what to expect. And so you get a lot of massive, shifting of positions as the news cycle is changing and all the economy stuff is changing and so on and so forth. I don't put a whole lot of, I'll look at it again, if this comes back down, I'll take a look at the big picture again. But until that happens, I'm not really particularly worried if it comes back down to 213 or something. I think there's a lot going on here, and I'm seeing advancements. So I'd only be mostly concerned if it broke beneath here. If it came beneath here at 212 at this point, I'd be concerned it could come really low. And that's as far as I want to take that for now. So, yeah. And then I did not talk about MPW at all today. It's the same as the others. It had a push up to 505, and then it dropped. It's at 474 again. The 470s is kind of a critical level for this. It was anchored around the 470s when it first came down. Otherwise, there's not much else to say. We're just backing up to a place that's more comfortable. Could this be a massive head and shoulder? Yeah, potentially. I mean, it's not out of the realm of possibility. But I also think that when this took off, it took off back here from 470. That's ultimately where it found that greater support. So again, that's where when it first dropped in, kind of hit that 470 area. So I put it in a good place for a potential bottom here, if it can hold. That could be a good place to stop for now. And that's about as far as I would take that today. There's just not much to say about it. It's just coasting, and everything came down today a good bit. So I'm going to give you the bare minimum here on GDC because I got to get going. It's 3 o'clock. Market's closed. And I don't want to spend forever and ever on it. I'm going to go to the daily chart and take a look. Yeah. Well, I mean, it's a risk, but on the one hand, this already pushed resistance, so this could be a massive just distributive effort. On the other hand, if it holds, then sure. This is a potential spring bottom because it could be a situation where it holds that bottom and then advances. I would suggest to you that something like this, probably the simplest answer is going to be the best answer. So I've said that before, but it's this has a wall at 16 bucks. It doesn't seem super likely that this would just rocket all the way up past that and just keep going forever and ever. And then I just look at macro trends and just sort of take a look at it and think about the value of the chart and whether or not it's already kind of met certain values. That trend has clearly been met. So to me, it's a difficult chart because I think that value's already been met. I don't know why you'd need to come back up unless you want to redistribute here at 670. Maybe a desire for operators or whoever's in it to come back up to redistribute here. But there's a lot of time too. It's all the way to April. So it's hard to say. It's kind of an ugly chart, huh? And this one definitely already had its big run. So GDC had a massive run already. I'll just keep it simple and look at that and see if it drops below. It already came below 50%, so it's looking a bit weak to me. Not horribly weak, just a little bit weak. Yeah, and then you can see like the 50-50 from that line that it's sitting on takes you down to the 30-cent level. So dangerous. I'm more inclined to think that it comes back, if it does come back up, that it comes back to like 4s. It's just a very common place to retest. So if it breaks out to 14 or something, maybe it come up to 4. I'd probably leave it at that for now. And if it broke down, I would just not be in it. It came back below that floor again here at 179. It's really close. I think it's a bad situation. So, yeah, I would keep this very, very simple. Just use it as a trend. So folks that asked me about the Discord group, if you happen to still be around, you can use my name, and if you use my name and message me and just tell me who you are and like what you want to do. If you just message me, I may not give you anything because I get random people that message me sometimes and I don't respond to them. So in order to get in the group, you got to get an invitation. I don't post it on here anymore because we've had trolls and junk get on there. So you can message me. I'll post it there. And if I can, I'll get it to you today or tomorrow. Just let me know that you want to join and who you are from YouTube. And okay. Sorry, guys. I was reading. Yeah. So, yeah, I can invite you guys if you want to message me. You might have to do a request or something, because I think you might have to friend request and then message. Ooh, there's a drop there. Meh, not much to say there. All right, guys, I gotta go. Appreciate you hanging out. I'll be on tomorrow. Probably do a morning stream tomorrow. So we'll catch you then. Ta-ta for now. Goodbye. We'll see you later. Thanks for hanging out. Appreciate it.